Good morning. It is August 18th, over halfway through the year. We're going to be streaming stocks, options, and futures trading today, looking at technical analysis on the charts, watching the SPY, watching GME, watching AMC, barbecue. This is a sell-off we've been in that has accelerated. Started as just a downward channel after this engulfing candle, has now accelerated and broken to the downside. So, where do we go? A little further down. I think we are due for a bounce. We might need to complete this handle here, or this full cup, for this inverse cup. Let's see. Yeah, it seems like that's what's probably going to go on here. So, looking for support at 431 area. Wanro pointed out on futures. Futures have already actually flushed through this level, this support, so it's kind of interesting. But don't have to make a handle. Could just kind of keep coming down. It's only if bears need more liquidity, they'll pump it up. We'll get a bounce on the rim of the cup. So we are doing that. Not sure how much of a bounce they'll need. Doesn't seem like they'll need too much. This has been a pretty aggressive sell-off now that we've broken out of that channel. So might not be seeing 50%, maybe only 23.6 at first level. We'll not get ahead of ourselves. We'll wait to draw the fib levels once we start to see that it is going to respect that as a support, or where it does. Could be anywhere. Could really be anywhere in this area. It doesn't have to be perfect. Pre-market, we're right down here though, so yeah, we're almost there. Excuse me. I did want to mention, thank you guys for your support, and thanks for subscribing. Thanks for hitting the thumbs up every day. That is much appreciated. And thank you if you don't have a brokerage that you're using Webull links. I'm gonna go over this again in like an hour. But yeah, I've got something to show you. It's funny. It's very funny. Anyways, sub up, like up, comment down. Happy Money sticks around. Also on Twitter at HappyMoneyYT. And you can get on our Discord. Link for those are in the description. I'll put a Discord link as well in the chat. And I'll pin it. Good morning, Guts. Be live. Sure. Like people didn't want to wake up for this sell-off. I want to look at their account. What the news is saying this morning.
They did not surge. They dropped this quarter. Total stores, however, grew to 411. That was a substantial increase. And charging stations also grew by a pretty large measure as well to over 1,000.
What?
To over 1,000. Now, something to look out for on this company, the partnership that it announced back in June with Volkswagen. They're producing Volkswagen branded EVs using key XPeng technology and platforms. And then looking forward, the third quarter deliveries are seen at 41,000 at the high end. That was the better than expected gain than analysts thought. They were looking for 40,000. And they're also forecasting a revenue of 1.23 billion at the high end. That would be a gain of about 32% at the high end. So you can see that the expectations are high for XPeng, but this is not a great report at all.
Yeah. All right, not perfect by several definitions here, to your point, but also not the worst. I mean, still, compared to a quarter ago, a pretty decent jump in the deliveries. Maybe not the same pace from a year ago as we saw there for the figures. They're moving in the right direction, but the market now taking a very different approach in how to deal with these numbers. So it does seem like the sentiment around these companies and these high growth businesses has changed when the backdrop is one about economic concern as it is this morning. We'll see if that has any knock-on effect in Tesla right now, but with markets down, we just kind of expect those growth companies to be heard, and appreciate it, guys. Thanks for needing on Kevin Hanks. Okay, Chinese stocks off to a rough start as the U.S. futures prepare for an open in 15 minutes. But we have seen a little bit of dip buying attempts after a weak start. We'll see if we get that this morning. Problem is, yesterday they faded down by the close anyway, so hard for bulls to find a whole lot of optimism. But at least rates are contained this morning. The dollar is contained. Let's talk Jackson Hole. Let's talk about valuations in a market that have come under pretty deep pressure in these last 3 weeks. Jeff Schultz joins us when we come back. Always a really good conversation connecting the macro to some of the earnings and micro story. The team at ClearBridge Investments, recession indicator.
Morning poison. You held on? Held on. Wanted to mid-play, decided to just hold it long term. It's a trade, it's a trade. Oh no, it's going against me. I guess I'll just hold it forever. You don't have to do it.
8%, but
have a
I
choice.
think it's really important to say that we're really early on in the quarter as far as data is concerned. We've only got about 2 weeks worth of data, so this is going to be a number that's naturally going to come down. But even if it's half of what we're currently seeing, this is in stark contrast to what the Fed was projecting for GDP growth. They were expecting GDP growth to slow
was your plan?
this
All right,
year,
good.
and we may
your plan.
see an acceleration. So ultimately, I think the knock-on effect may be that we get a rate hike. Maybe not in September, because expectations have been set that we're likely not going to see a rise
till the 31st,
in September.
right here.
But certainly, I think that November is going to be on the table for another hike.
Okay. What do you think the market will do if that
it's
information
not
becomes
a
more
high cost
obvious?
basis, really.
Because
This
it
thing's
seems the
definitely
priority of the
spikeable.
market is still to
We've
try and
seen.
play this game of
Had to
pricing
wait a
and
few months
cuts.
here, but
that obsession, Jeff. I mean, what does that do to the market in terms of creating this constant imbalance between the market and the Fed when they're so obsessed with trying to time the cut?
Well, the market has consistently underestimated the Fed this cycle, and I think they may do it yet again. If you look at the last couple of weeks, you've seen about 40 basis points of cuts priced out of 2024. I think that may continue if you continue to see some resilient economic activity. And depending on how Jackson Hole next week goes, if Powell really does lean into growth being much stronger than what he was anticipating, you may see even more cuts come out of the market and maybe more of a rate hike priced over the next couple of meetings. But I think more importantly, from a market perspective, I think this continues to put some upward pressure on the 10-year Treasury. And as we've witnessed over the last couple of weeks, a lot of investors are likely going to take some profits given how elevated multiples are.
The elevated multiples, are they a problem on their own, or are they a problem if bonds sell off? Is the trade-off between valuations and the quote-unquote risk-free rate the problem?
Well, it's not uncommon for multiples to move ahead of
10 minutes to open.
earnings.
Thanks, guys, for your thumbs up. Appreciate it.
You see this after every bear market or every recession
More
or
likes.
deep sell-off. So this is just the normal playbook that you normally experience. But what's different this time is that the 10-year Treasury continues to ratchet higher. And again, I think that this is a big headwind for what's currently baked into the market. And if a recession does materialize, which again is our expectation, I think the 10-year forward earnings over the next 12 months that are being priced right now, 10% forward earnings that are being priced right now, are a little bit too optimistic and could lead to a choppier market and some more downward pressure.
Your recession dashboard right now, your risk monitors that you look at, there's red and yellow. There's no green on here. Hasn't really been since the end of last year, it looks like. And that hasn't changed with the economic surprise rate we've been seeing. How come, Jeff? Is there nothing here that maybe has the actual potential to reach critical, mass breakaway velocity for the economy?
Well, yeah, 12 economic variables, stoplight analogy. Today we have 10 red, 2 yellow, and 0 green signals. This is the output that you traditionally see as a recession materializes. So we've always kind of had our eye on the late third quarter for the start of this recession. Clearly, with the economic momentum that we've seen, we're pushing it out towards the end of the year or maybe even Q1 of next year. But at the margin, we still have a very deep red color in the dashboard. We're nowhere close to getting back to yellow at this point, even with the strength of the economic activity that you've seen. And the one thing I'll mention, Oliver, is that we got the leading economic indicator released yesterday, which showed its 16th consecutive monthly decline. The only 2 times where you've seen a greater number of consecutive declines was going into 1973's recession and the great global financial crisis. So we're in rare territory, and that rhymes with our expectation that, yes, activity is strong today, but as we look out on the horizon, you're going to start to see some more weakness.
the important thing here is a lot of folks will listen to this and they'll hear, okay, recession odds still high from Jeff's analysis and sort of inevitability, and then they'll go, cuts are coming. So do we have to separate those two things? Can we get the type of situation you're describing, but a Fed that still has to stay vigilant in its inflation fight?
Unfortunately, the Fed does need to stay higher for longer. The Fed does not want to repeat the sins of the late 1960s when they cut rates when the unemployment rate was 3.8%, so a very tight labor market. And when they cut rates 3 years later, core CPI basically doubled, going from 3 to 6%. And in our opinion, really kind of started off the structurally higher 1970s. So from the Fed's vantage point, with the unemployment rate at 3.5%, rivaling 50-year lows at the moment, I think the Fed really wants to see a weaker labor market, a higher unemployment rate before they will cut and give stimulus to the economy, because they know if they don't do that, they do run the risk of having to deal with a much greater inflation problem as we look out on a 5 or 10-year basis. So I think the cuts that are being priced now are a little premature, but if we do see a strong deceleration of economic activity and it's going to be a deep recession, maybe those cuts come a little bit earlier, but again, it's not going to be market friendly if that's the case.
Okay. Is there an obvious place for portfolio managers or investors who either want to be in stocks or in some cases have to be in stocks on behalf of clients or on behalf of their investment mandate? Is there an obvious, easy way through this? Is there a hedge? Is there a safety trade? Is there a minimum volatility trade? What's the solution in terms of action if we have to be in stocks, Jeff?
Well, look, we think this is going to be a great opportunity for active managers to be able to sidestep areas of overvaluation and embrace some of the areas of the economy that are going to be okay, whether or not you have a recession or a soft landing. Home builders, for example, you would think with the rise of interest rates and mortgages that home builders would be doing bad, but given the fact that you've underbuilt for over a decade and a lot of existing homeowners aren't bringing that supply onto the market, home builders should be able to do all right in whatever environment ultimately transpires. The same thing can be said for energy, as inventories are really low right now. Energy could surprisingly do well in this environment. So I think there are opportunities given the backdrop that we're anticipating, but ultimately we really want to embrace higher quality companies in these secular themes that are in the marketplace at the moment.
Okay. So when that moment does come, I mean, ultimately buying on in the moment of recessionary events is something that pays out generally in stock market history. Is there any sector or theme that you feel is going to be an obvious buy when there's a discount, like when things do go on sale, and they're starting to go on sale here? What are you waiting to buy? I mean, where should we go in the discount aisle and start picking stuff up?
Yeah, I alluded to a couple of the opportunities. Home builders, I think semiconductors are going to do quite well coming out the other side of this, given the AI theme. Again, energy and materials, given the deficits and the low inventory that you're seeing in those areas, and the green initiative that you're seeing across the global economy, I think those have long tails as well. And I think you want to embrace kind of green energy initiatives like EVs or green energy. So I think there's going to be some opportunities as the dust clears and we ultimately price this recession in.
Okay, but we're not there yet, right? The dust hasn't even really shown up. Chart like a home builder is barely even off the highs.
Exactly. Yeah, I don't think that the markets have priced this recession. Yes, you've seen a little bit of a pullback here recently, but I don't think it's going to be a deep peak to trough decline. We may get to, say, 20%, which was similar to what we saw back in 1990. But ultimately, I don't think that the markets have priced in this recession, and clearly have priced in a more optimistic soft landing, given the price action over the last couple of quarters.
All right.
Interesting to hear from
him. Jeff, thanks a lot.
2 minutes to open. I did want to say thank you guys for your support. Got a promotion. Not at work. A Weeble promotion. Just did. Anyways, I don't know how these YouTubers make millions of dollars on Weeble promotions. Maybe I just pumping it all the time works. I'm not sure. I just didn't imagine that would be successful. anyways, I think I got my second ever promotion. So if you do sign up with Webull and you use the link in the description or on our Discord, you can get free shares. And I think it's my second one ever. Is that crazy? For all that, yeah. The share of Apple. That is neat. So the guy that used my link and then opened up a Webull account, deposited money into Webull to trade with, he also got a share. So that's awesome. I don't know why it says estimate. Oh, it's a partial share. Makes sense. So it's $60 worth of Apple. Fractional share. I'm gonna dump it and put it into SPY daily puts. Here we go. Market's open. Ding, ding, ding. Back in the sell-off. And the rough. Barbecue says it's down 5.5, 17.50. GME's 18.20 down 0.8. SPY's opening up down 0.7. HE is up 7. I saw that pre-market actually. So I'm thinking we should get a handle. I mean, we should. I don't know. We could get a handle basically on this inverse cup that we built. Might need to see a little more selling off down to the 431 level. So could be today. Today and tomorrow could continue to sell off, or maybe we'll just hit this today and start bouncing. Have to wait and see. But yeah, then a handle could retrace this back up. 440, 441 at least. Maybe somewhere around there. So, I'm gonna play it slow. With my longer term SPY puts, I don't know if I want to sell them and reopen or just average in. And I'm thinking I'll probably just average in if we do get a bounce. Since those are more longer term as a hedge and kind of a swing trade. I'm not relying as much on timing the market. The Yaz is really bumping this morning. There it is. So we've got Hawaiian's up 11.3. Little gap up there. That's one of the higher ones on my watch list. Oh, eBet also had a gap up, so appears to be consolidating. Didn't have a whole lot of insight yesterday on it. I'm like, well, when stocks do huge volatile moves, I don't know. But yeah, consolidation is good. Very nice consolidation on eBet. So that's not even that far. Is that low right there, 431.19? Yeah, so we could hit that today for sure. Doesn't have to be perfect though. We could start to build it before hitting there. But I'm gonna wait for something like that before I go long. Serious support. Yeah, eBet's up 17. I think I'm gonna keep scaling out and getting into cash, and then just probably buy puts, honestly, on bounces, like longer term bounces, longer term puts. You know, bounce could last for a couple weeks before you hit new high. There's really a lower high on that handle. And then I'm going to keep targeting January probably, and just at the money so it's safe. Then hopefully some of my bankrupt plays work out on some of these EVs. Money starts to flow out of the market. You're going to see how stupid those investments are, how overvalued they are. Hopefully we'll see the bigger sell-off on those. Back to the fundamentals. Carvana has held up very well, speaking of. Brad, not so much. On this bounce, if we get it, we'll be looking to closing a lot of the longs, even if it's for a loss. Just shifting exposure. But I want to be patient because this isn't really the time to close them after this big sell-off. But hopefully we can get a bounce on like Rad. Hopefully we get something on Teladoc, especially since that's support. Hopefully Dish as well. I like Dish. Yeah. Probably just put more capital into SPY puts. Or Apple puts or something. Apple's had quite the sell-off actually from the highs. Pretty impressive. Bet's up 16. Did I finish selling my Tesla? I think I did. Yep. So I'm out of my Tesla longs. Sold some here. Sold my first big amount. 400, one of these peaks. Close to 400. Wasn't planning on selling it all out, so I just held it. I'll be back in. Back in with Tesla. I'd like to see double digits on it. Might be too greedy. I think I want to sell some AbbVie. This is another one of my long term. It's a good divvy stock. I don't want to sell, but I kind of do. The daily here, it has this RSI divergence. MACD to just flip. I'll probably wait again for a SPY bounce next week or two. Get some support on that. Thing with dividend stocks is they don't, unless we get like a crash, like real capitulation, they oftentimes hold up really well. They'll see some, but unless it's like a pretty significant crash, sometimes they even do better because there's a rotation out of growth into value. That's my hesitancy to closing out of good dividend stocks. ABNT is down 7.5. Yeah, I got a promotion. I want to sell Verizon. It's at such lows, and I like this one. Always come further, but I think I'll hold this one. Actually down on that one. IRM. I had a bigger position here. I'd maybe trim some of it. Another great divvy stock. And liquor, of course, is my favorite long-term stock. Friggin' liquor. Down 9% today. Just IPO straight to BK. IPO straight to bankruptcy. Straight to penny stock. It is, it's a penny stock. That was fun. Square. Pretty down on this one too in the long term. Wow, that thing's had quite the sell. Huh. Yeah, some of these I'm just going to be writing down. AMC down 1.5. Not until what, next Thursday? The reverse split. No crash yet. No, not yet. GME is flat. This might be a good. As I was saying, GME will front run SPY. I mean, you can kind of, if SPY is hard to read, just look at GME. It's right at that support. So same way this has come a little bit lower. SPY has come a little bit lower to find that handle or find that cup. Just like this. So could look for a long on the bounce for GME too, if you like to play GME for some reason specifically. No, not fun because the option's stuck on there now. Stuck again. Fun is green 1%. Most resilient stock out there. Done better than Apple. Rat's down 2.7. Bulldog's finding its happy place on that support. One's up 4. If GME's ever gonna buy Funko, Balls really appreciate it. Ops is up 4. Yeah, you bet's holding 20%. Got birds up 8. Look at our beloved barbecue. Barbecue's down 2.65. That's bounced though from the low today was 1671. So maybe a little double bottom there on barbecue. Is that support level? I have that 1750 area. So might be bottoming out there. I want to see it break some resistances. A big inverse cup on this thing too. Yep. Now the question will be, is it a double bottom or is it a cup and you're gonna get a little handle coming down? Or does it not even need to do either of those? It's just gonna keep flushing. Find support even lower. A lower cup. 7 cents. But so far, yeah, it's going a little support there. 1750. 20% on eBet. we can make a lot of money on this downturn. You don't have to just make money with stuff going on. In fact, you can make money the fastest. Crashes, I would say. The most people get very wealthy off of recessions and bear markets and market crashes. And then you have great opportunity to make money on the next bull market. Big old purse. He's coming down a little bit. I don't know if there was news for its gap up. On plan to not restructure. Oh, good. Not much of a surge. Top sold off some more, down 10. Rides at 1.8. Run is green. Good, it shouldn't be down below that support. The heck's it doing? Charge point also came below that support. Both better knock it off. Picks down 5. AMC is flat. HE is holding up 5%. Barbecue 1837. It's almost green. There's SPY, new high on the day. See if we get resistance up here at the low of, or the support on pre-market. Might just grab a short here or up here. Still climbing. Bird's up 11. eBet's up 20. Oh, Funko woke up. What? GME acquisition. GME acquisition. Why is it rallying? 7%? Oh. HE maybe finding support, hopefully. Got Joan up 6%. Jolene, 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 Jolene. Interact. Dead owls. That's all I smell in here. Dead owls. Boom. Back down to that support. You know how Teladoc looks. Gimme little bounce. Alright, 1.4%. Maybe it's enough. Maybe it's close enough for that cup. Still not totally convinced. Eyes feeling a little resistance at that level we have drawn. Funko 11%. Bet up 18. Winded. Bounce a little bit there back to VWAP. Barbecue is basically flat now. Presumably finding support on this 1750 area. As long as we don't start breaking down below. Good. BNS down 6.85. Just below the 61.8% retracement. Could have got puts right on that resistance potentially. Dude has a little more strength. % on Funko. 8% on Hawaiian. Full raise up here. Okay, grab a couple puts there. That candle, 5 minute. We'll see. Might average in if it comes up even more. GME's holding 1%. A little bit. Let's see what we get at VWAP. See if we get a little inverse cup here. Retest of the low. And this is kind of the level 431. Doesn't have to be exact, but it might be a little bit lower than this. Fully find the buyers. All this down here. See if this candle closes engulfing. Nice, Bubblicious. Well done, man. We're at 12% an account. Dang, how big was that account? Little pop there in GNS. 98 cents now. It's about to go green. Wine's coming down there a little bit. What's going on with Funko? Nothing. Good volume this morning too. AMC's down 1.3. GME's up 0.5%. Space up 1.5%. Buys to VWAP. Dish is down 1.8. Up's down 12, 13. No rebound rallies on these. Nice, Bob. That's awesome, man. Yeah, GNS is showing a little poppage. $18.35 on barbecue. Bet holding up 17%. Bunko coming back down to VWAP a little bit. Hawaiian up 4. Got we came down 20%. Wow. Lapped. Bullen's down 20. Find the dip gauge. Press is down almost 18. Liquor's down almost 15. I wonder what the record is for a stock to go from IPO to BK. Like a week? 2 weeks? I wonder if Liquor will break that record. There's a bounce on SPY. Up down 11. BGC 8. Globe down 8. Groupon's down 7. This thing has been quite the rally. Yo's down 5. Urca also down 5. Add down 4.3 now. Flushed through that low. Suck, Rad. GME back to red. Barbecue's green, 1.5. There you go. See if we can break this first little resistance. I have a line here on the daily. Was there supposed to be another court hearing or something today? Barbecue? I don't know. Maybe this was what we watched yesterday. Look at that weird VWAP. What happened there? Little pop on barbecue. A weird line up on VWAP. Range. Yeah, barbecue hit 1950 there for a second. Oh, looking good. Signs of support. At 15% on eBet. About 30 minutes in. Thank you guys for your support. Thank you for your likes. We're at 12 likes on the day. Appreciate it. Still sitting on these puts. I have a break-even stop, so which might get triggered here. That VWAP is weird on SPY. I'm looking for low of the day. Sell one, and then I'm probably gonna sell the rest if we hit down here at 431. GNS is green 3.5%. I think it's a fickle one though. Don't forget. 4%. I don't know why. Maybe because it's on this other exchange. That's like partially makes it weird. It trades on like the American, New York Stock American or something. It says Amex up here. Definitely got a head and shoulders there now on the 5-minute. Have that engulfing 5-minute. Bit of a bear flag here. Long wicks though to the downside. Very bearish. Yeah, it does seem like people check pre-market down so much and they're like, I don't think so. Go back to sleep. I've had it up to here with these red days. Oh, KBNT just got dunked on. What'd you do? I have stops on that? I don't think I did. I did. I didn't. Shoot. Should have. See if it finds some support on that trend line. Well, holding now. Holding for a zip vid. Barbecue up 5 1/4. GNS up 4 1/4. Get some volume there on GNS. That ain't bad. %7 on GNS. Hey, we've got 2 out of the 3 branches still operating, and that ain't bad. Mars attacks. Morning. Morning, Tasty. A great scene. That ain't bad. Love Jack Nicholson.
I want the people to know that they still have 2 out of 3 branches of the government working for them, and that ain't bad.
And that ain't bad. Ugh. SPY slowly melting. GNS 7%. Barbecue 5%. It said air when you're trying to type. Weird. Oh. We knew you were there in spirit, Tasty. Hawaii's up 6.5. Now you know what I'm saying when I say, and that ain't bad. Barbecue. Yeah, I needed to do some stuff over here. There's our little SPY fleshy flesh. See if we can trigger some more stops today. Yeah, GNS back up above that 61.8. That's pretty good. Pretty good. I just don't seem to be playing anymore. Maybe if we get a break of this resistance. No need for me to be dip buying. And with barbecue. AMC is down 2.3. Buy coming up a little bit. Big wick down there. Morning, Guts. Morning, Kevin. Morning, Christopher. Oh, maybe this was the full cup right here. I don't know. Didn't seem quite low enough. Let it get its little pump back to VWAP. Not going anywhere. 11% on Funko. GNS 12%. Look at you. Oh, okay. 13%. You're being rewarded. 14%. So it's up above that line, but yeah, I want to see some consolidating and some support built. It's SPY. It's you. I got stopped out. How dare you? Well, that's the problem. Decide to try and hold what does the whole thing. all the way back to VWAP. I want to get back in those. I don't know. Oh, going up again. %, on GNS. It's kind of funny, that resistance again. Not what I wanted. Not weird. On the hourly it shows that it's broken out of it. On the 5-minute shows it's below it. I don't get why Weeple does that. Well, maybe because extended hours? Yeah, okay. That's because I had extended hours on. I was throwing things off. There's my level I want to break. %, on GNS. A fatty candle on the hourly.
Let's get nuts!
Let's get nuts, indeed. For the hot and ready. Thanks, Gats. Appreciate it, man. Are hot and ready still $5? I don't know. I don't know, Guts. Thank you, man. I appreciate the generosity. It is Friday. You nailed it. Totally gonna have hot and ready. Not actually hot and ready, but maybe you'll have some pizza today. Pizza party's gonna be fun. This is a big move. Yeah, 24%. Thing just... She's fickle, man. Just out of nowhere. Definitely GME vibes. Like a year ago. See what happens up here at this resistance. Has momentum, has volume, but we've seen this thing pump before. There's a small one at that pump. I don't know. If you're unsure of the play and you're back to where you like it, consider selling it, basically. You're like holding it and you're like, man, I wish I didn't hold. Now you're at a good spot. I say no thank you to taxes also. Are they really still $5? That's legit. Gilly, you just bought back in? Oh man, the power of the green candle has power over you. I'm just gonna leave SPY alone. Could have taken profits here. I was up like 25% on those contracts. I wanted more. I wanted to get low of the day. Well, wait for the next setup. True. Unless he popped back in this morning. And I wouldn't have bought back in there. Below that 61.8 also. Maybe 5%. Gonna get another engulfing candle on the 5-minute. I just have to. Got a bad entry there. Should have opened at VWAP. See. Yeah, I'm stopped out. I'll wait. 10:30. Still early. I'll wait till low of the day. Maybe catch the long. Seems like it's going to complete this engulfing, but there's still his head and shoulders on here. That big rip just screwed to stops. Put it back into a chop. 20% on GNS. Back up above that 50%. He is flat. Barbecue up 5.4%. Here's the first level. Barbie needs a break. Oh, GNS. Yeah, eBet had a little gap up. I think it's consolidating, which is a pretty good sign. Very bumpy fashion. Morning, Julian. You just arrived for the GNS show? You guys all holding GNS? Feel so left out. Don't know what this line is. Must have gotten moved. That would be my line. 120,000 GNS. That is neat. May the odds ever be in your favor, Poison. Yeah, on the gap fill. Thing is this. I bought in a bunch right here. We've been waiting for this move down to this price for months. And then on this day I bought in, not a bunch, I bought in a little bit. But then that threw me off because then it sold back off. And I wanted more exposure, but since it's already bought in, I was already down on it. Didn't feel like adding to it, but this was all setting up exact. I mean, it was, we got our trend lines here, we got everything set up to where like, yeah, this looks like we're gonna bounce for sure. So on this rally up, I didn't have as much as I wanted. Bad, but it's okay. Nice poison. Are those 20,000 shares? Are those just from profits from the last rally? Or is that more than that? I made another engulfing candle. Seems like it wants to flush down. It's just choppy. Oh wait. Genus had a bounce. A bounce off at 88 cents. Back up above that 50% retracement. Got some volume. Didn't break out of that resistance though, which is not good for a rally, but this is good, showing some consolidation maybe at a higher level. Build up a little liquidity and then maybe break it. Opportunity with initial cost basis. Oh, I see. The dip was really this morning. I guess yesterday, but not even deeper buy this morning. And SPY is just chopping. Bunko's holding at 11%. Got top up 8.5. Who's in chat still holding top? No, there's some of you. That's actually not a bad spot right there. Double bottom on top. Maybe an engulfing candle today? Yes. I have to pick up some top. How's my KBNT doing? Yeah. Well. Yeah, I'm gonna get some top. $14.25 on GNS. Buy breaking VWAP here. I've got green over the MACD, or green MACD, and green building over the 9 moving average. So we maybe satisfied our cup on this buy. This handle is going to be, it might be pretty epic. Little squeeze, short squeeze. In the market. Whenever it comes. I don't know, Interban? I don't know. Top's been just getting dunked on. Fortunately. Little gap there on the 195. Maybe that $2 level area will hold. There wasn't really a whole lot, Julian. The fib levels was the closest thing that I could see. That's 61.8%. It did drop below it a little bit though. It opened below it this morning, but yeah, there's not. I'm sure there's people somewhere that'll tell you how they would have seen this coming. I want to see Tup fill that gap to the upside. GME's back green. Buy. Decided to chop more. Could be a little double top there on SPY though. Really hasn't wanted to go down yet though. Quite persistent. I'm gonna leave it in the chop. I want to see low of the day first. Only 1040. Ines holding that 18%. Top holding 10%. I have a buy order on top. I'll just probably leave it. If I miss it, I miss it. Oh yeah, top. This one has huge spread too, doesn't it? Oh, it's pretty tight right now. Barbecue holding 5%. Hawaiian's popping up there. A VWAP now. Space? Yes. Now it's going to come up here and find resistance at its old support. That. Just kidding, there's hope. Put a longer term trend here. See if it found some support there, we'll see. Engulfing candle today would be appreciated. You have reaching for the high today. Yeah, I have some tough exposure. Or top, little pop on top also. What else was popping? Something else. I guess everything a little bit. HE up. Base. Market ready to build that handle? I don't know. TTO is ripping too. Yeah, there you go. TTO 10%, 11%. That ain't bad. This has been in a nice uptrend. Hawaiian now. 10%. I got some puts there, maybe for the double top. Not going to be as adamant about it reaching low of the day, because it's still just in a chop. Barbecue up 4.6. Oh yeah, top. On down to VWAP. Now VWAP on top is higher. KBNT still selling off, down 30%. GNS bull flagging up there. Up, filling this gap. Very good. Base is up 5% now. If SPY needs a little higher to get a double top, we're just going to rip through it and start filling gaps. This is the way to space. Full flag on GNS. Hawaii 50 up 10.8. Yellow coming back down a little bit. Eyes coming down a bit. Target for top. It just filled the gap. So I'd say that's it. Don't really have target prices. Yeah, necessarily. It's definitely still just in a downtrend. If it fills this gap up here, also that $2.80, then maybe it'll be shifting Japanese momentum. Yeah. Not a whole lot of resistance till I guess what 267. 280. So could keep climbing back up there, but yeah, I think it's been a massive downtrend. Nice to see some light though. High below VWAP now. Hawaii's at its high on the day. Close to it. I'm gonna sell one contract here. Not gonna be greedy, not today, not with this chop. Do we have clear direction? Barbecue holding 5.3%. GME is flat. Selling another one. Oh, we have an RSI divergence there. That is neat. Just bearish. Lower highs on the price, higher highs, RSI. That's bearish, isn't it? The hidden divergence. Confused with those hidden ones. Yeah, it's bearish. Hope top keeps ripping. Only down 1%. Gonna close more of those contracts. Yeah, top. Green. Green go. Red to green. Look for 27, 33, or 28 on that gap fill on top. ENS looks like it wants to break out his bull flag a bit. 22%. Seemingly wanting to get above that resistance. Not ever come to my level. No. ENS wanting it. 24%. The VWAP's so high on top. There's GNS 25. Not to bust through the high of the day. That resistance. Got some volume to support it. Might be even getting a gap fill today. Oh, it wicked up there. %. Hit 127. High climbing up. Still stuck in its range. Oh. See if it breaks here. Broke it. It did it. Hi, there it is. Starting to fill the gap. What do we get here? Basically just a bull flag breakout. Could say it was a little cup and handle, but not a whole lot of patterns going on there. Bulls did pull back to VWAP for some liquidity. So this move should be sustainable. Ready to build the handle. Seemingly. Gap on GNS. Up 138 would be a gap fill. Excuse me. Red candle and GNS there. Back 20% up. Didn't like the breakout. Getting in some SPY calls here on this retest. Now, if that was the full cup, given today's OPEX, so got max pain and stuff to deal with. But eventually we could be starting to see the handle and the retrace. All right, Bubba. Top's going. Never got my fill. Ugh. There it goes. Whoa. People? What was that? Jeez. Shouldn't have been greedy with it. Thinking it might get a pullback before it does that breakout, but yeah, you gotta break out on that bull flag there on top. GME is back to green. BBBYQ up 5.3. Yeah, it's just consolidating up here now. The average into calls. HE ripping up there. 12.5. It's consolidating. Up 13.5. New high there on SPY. Up 14.5. Ace is up 7. Yeah, we're getting our handle, or double bottom, one or the other. Markets. I'm gonna hold these SPY puts and just average into them. We could get a full on like double top here. 15 minutes till EU close. Thank you guys for your support. 14 likes on the day. Buys fill in some gaps. Eventually starting to establish handle. Inverse handle. This up. NS up 20%. Pops up 13.5. Up. Popping. Up's filling that gap too. 11.5. That first little resistance area. $28 will be a gap fill. Next resistance after that. Oh, that 50% retracement at 32. Probably pull out of some of these calls on that pre-market high.
The Chinese consumer. So people are simply not buying the way that they had been, and it's weighing on businesses. The reopening just really fizzled and didn't happen at all. And people's level of wealth, due to what's happening with the real estate and then with the trust products, is really weighing on the populace. And when that happens, that hurts demand for overseas products as well.
Yeah, and people are looking to President Xi Jinping to sort of step in. And just to clarify, it was the Soho China profits that fell 93% in the first half. And that's why that stood out to me. Thomas Martin, thank you so much, of Global Alta Investments. Good to see you, Thomas.
Hey,
thank you.
Good to see you. Thanks.
Plenty more to come here on Trading 360. We will have the big three. Mike Shore is coming up next, along with Ben Lichtenstein, to take a look at the charts for Caterpillar, Datadog, and TJX coming up.
That run up to the, not quite the highs, but 295. Yeah, with the call calendar, we're going to have a little bit of leeway past 295, but just a grinding type of move. So I'm
Morning,
looking
Random.
at the, what was that? The 295 call calendar, September 1st versus September 22nd. Normally I would do a regular set, but for some reason they only have $10 strikes listed for the monthly, so I went out another week. Implied volatility is on the low side, which is good for a calendar because you're long Vega and you're actually collecting theta. So a grinding type of move up to that 295, perfect type of scenario for this.
Right. All right. So let's move on and talk about Datadog, which ran up, hit a new high, and then had this big gap down just recently. Ben's going to break down those charts in a moment. But what stood out to you, Mike?
This one hurts me, man. I really, I love this company, and actually it's showing a little bit of resilience. I'm looking at the 100-day moving average, and I'm looking for a breach of that. It's actually bounced there. So, the signal that I came out with was for a push down below that, which, like I said, I normally love this company, but it just is not performing. So I'm looking, if it cannot hold here, I'm looking for that break down below, and we do have quite a bit of room to the downside.
What are your thoughts on Datadog, Ben?
Well, this is a stock that just recently took out a key level. It had been trending higher on the 4-hour candle chart. You're going to see taking out 96 was not what the bulls wanted to see. Look at the migration of value that had been occurring to the upside and how we've seen quite the reversal here, right? While we were balancing around 112, we were looking for a breakout higher and then a new area of consolidation to form at an upper level in continuation of the working assumption that value. Again, not what the bulls want to see, and invalidating that working assumption that we're trending higher on this time frame. I took a step back and looked at the daily time frame, and this shows that 90 is kind of a key pivotal area going back to the range that we've been in for the most part since we'll call it March, April of last year. You can see upper extreme around 120, lower extreme around 60. Do the math. It's pretty simple. We're holding just above that. So that gives the bulls something to hold on to at this point. But longer-term trend to the downside, right? Recently failing at a key upper extreme and coming off. Take out 90. We open up a door for a retest of 60, 63. I want to show you where we are relative to the 50, the 200. I don't have a 100-day moving average that Mike just pointed to, but I do have the blue line, the 50. We're below that. We're kind of pinched here in between the 200 and the 50. Definitely something to watch next week here, but losing momentum, and again, not what the bulls were looking for.
Stops hanging out pretty well up there.
Between the 50
Very well,
and
10,
200 day. I know you're
10.5%.
watching the 100-day. What is the trade, Mike?
Yeah, Mike, give us the trades.
If we get below that 100-day moving average, which is, like Ben said, normally not a moving average I look at, but in tech names,
Other sound.
that actually is as important, if not more important, than the 200-day. Right? You're always looking for what are you looking at market, and in the shorter time frames that we look at in these growth type of stocks, that 100-day comes into play. I mean, if you put it on there, it's just holding it. So I am looking at just the 75-80 put spread. I want to buy it, and it's cheap. It's 80 cents, and it's very much in play. The volatility is targeting that level. 75-80 put spread for regular SEP for 80 cents, but we have to get below that 100-day moving average.
Right. You know, Mike, it hurts me too when I see some of the stocks I love, you know, gapping down or the market under pressure. I'm sure Ben could fully agree. Last but not least, now this is a name that has been performing well, had a great quarter, has been cutting costs. In fact, some of the analysts think that TJX could outperform some of the peers. That's the parent of TJ Maxx and Marshalls. Your thoughts on the final trade here for TJX? Why does the company stand out to you here?
Or SPY, whichever you prefer.
I think it's more a function of the overall market.
GameStop's still a crazy squeeze possibility that might be better exposure.
These highs. I mean, we're at 52-week highs when really the consumer in general, the U.S. consumer, yes, it's strong, but is it so strong that it's going to be the leader?
That said, this could still turn around. We could still see that.
I don't believe so. I mean,
fully test on that.
The market goes up, then I think that TJX
got a head, we've got a shoulder.
But until we start
but so far it's looking like bull flag. Bull flag.
I'm going to fade the upside by selling an iron condor and sell the near upside, and then I'll sell something down below to kind of finance that. I don't
breaking through those levels, 18% now.
But where it is on the 52-week, given where everything else is, I just have a hard time.
Didn't want to day trade this, but
and so I'll just sell the upside passively.
Right, understood. What are your thoughts, Ben, on this one?
Well, I think sustainability is definitely tough in this instance, but we're not getting any rejection of these upper levels or any indication that the trend to the upside we've seen is coming to an end at this point. Taking a look first and foremost at the hourly candles, you can see basically since the lows that we saw back in April, beginning of June, we were around 75, rallied all the way up to 90. We're currently balancing around 80, stepping away from the hourly candles and move just this spring, going back to, well, this time last year, or I should say March of last year, and then this time last year we were chopping around 63. You can see again the areas of migration of value to the upside. Trend higher is pretty well defined here. Tough to fade that one in this instance, I feel like, but above the 50, above the 200-day moving average. One thing I'll give Mike with this kind of supportive of that more neutral kind of approach towards trading this one is that the RSI is somewhat limited in terms of participation. It didn't take out that July high while price has, but this one's trending higher still on all time frames in this instance.
All right. Thank you both so much for the big three today. Mike Shore and Ben Lichtenstein. Great to see you both. Really appreciate it. All right, coming up next, we're going to spotlight Cintas. The company hit an all-time high last month. It's up more than 7% year to date. Cintas CFO Mike Hansen is standing by next.
Little sickness still in there. Bullfly, AK channel. Yes, there's an upward channel. Large logistic companies. All companies are at risk. That was me, sorry. Up, consolidating up here nicely. Eyes coming down a little bit. If it catches support. The channel. Bubba. Why we've got up 12%. Bunko's still hanging out 10. Upper. New high there, breaking out. Filling that gap. 28. 280, 10.
Saw a loss of 43 cents versus the street's estimate of 29 cents, and revenue did come on 0.28 million, and now they are actually attributing this loss of the reduction in its gross margin when it comes to vehicle sales due to the pricing pressure that they are seeing in China, especially for those that are really commanding these pricing adjustments like BYD and Tesla. And they're also seeing an increase in competition from new entrants like NIO and Li auto as well. So not a really good report to say the least, but they did also increase their projected deliveries in Q3 between 39,000 and 41,000 vehicles. That's their expectation, a significant ramp up from what they did in Q2. That's up about 32% of what they would see for the same quarter last year. So that's why we're seeing a little bit of a pullback. Also with the macro headwinds in China has always been, that's also been an issue for this stock. And hopefully we do see a bottom soon and bulls start to come back in and try to bid up the stock in the near term.
All right, thank you for that. And what about another mover, and that's NVIDIA, which has certainly wowed Wall Street and has soared. What's jumping out at you now? I've seen some price target hikes too.
We continue to see price target hikes to the upside, but we are seeing a little bit of pressure and volatility in NVIDIA going into the close here today. Not surprising, we are in options expiration, but the street's actually expecting around a 10.4% move to the upside or downside when they report earnings next week, Wednesday, and that's what we're going to be keeping our eye on. The revenue estimate right now is sitting at $11.04 billion, and remember, they upped their guidance for this quarter as well last quarter because of the increase in demand for AI chips like the H100. And that's going to be what the market is going to be keeping their eye on, the data center side of the business, as well as gaming, because they do believe that they saw a bottom in that segment as well. Nicole, just one other thing to note, when we're looking at the impact of NVIDIA for the NASDAQ 100, it has around a 5.4% weighting for the total NASDAQ 100, which may seem small, but that actually does have a dramatic impact. And also, if you're looking at the semiconductor space as a whole, it has around a 12.5% impact on the NASDAQ 100. So it does have some weight. It could actually impact the stock market in itself. And if we have some good news and also some really good guidance, that could push up the marketplace, and we can have other sectors like communication and technology move along with it. And that's really what the market is really hoping for, because the economic data has been bleak over the last several days.
All right, Kevin Green, thank you so much for that. Really appreciate it. All right, folks, we will be right back. We're going to just take a look here. By the way, we're going to be talking about Deere later in the show. Good report from that company. We'll be right back.
Excuse me. If we can hold this channel, that's good, but it's kind of set up a bull flag or head and shoulders here. Not very good for the long. Gina's flushing there. Hello, VWAP. Oh, it's fickle, man. Didn't break above that resistance. It's wicked above there. Held no support. That's what you need to see. Up still consolidating. Up still grinding up. I come back down to VWAP here. You've got an inverse head and shoulders here. Bardo's up here, and now we've got a head and shoulders here. Back to VWAP. Still a bit of a chop. Top isn't. Top just keep going. GME finding support at that 1-1. HE, new high on the day. It's up 12.8. Little bounce on VWAP. "15 minutes from EU close." Or since EU close, better said. Got 20% on top. Hope this is a multiple day rally. Apron? Yeah, apron's up 11. Yeah, it's had a nice looking chart. Had it on and off last couple weeks. Nice bounce off those lows. And that reverse split, which didn't seem to really affect it much. In fact, it rallied the next day. Ton of volume. Kind of strange. See if it's one of the stocks that reverse splits and survives. coming back up again. Bounce off VWAP. Up. 24% now. New high. $87. Then 705. I could be repeating the same head and shoulders right here and breakout. Head, shoulder. And I dug deep a second time and then broke out. Got the head and shoulders up here also. See if you get kind of a retest. Or if we just break out of this. Stick in the channel still. Top 26%. HE coming back down to VWAP. UNS holding that 11%. 1.1. Aware, bull flagging up there. 11.3. Top 30% now. This is looking like it's going to need to be a day trade. I use all its steam up all in one day. Other time did. I think bull flagged into close and then sold off. Then bull flagged into close. Put some strength in today. A lot of one-day pumpers on it. Ooh, 30% though. That is neat. You're saying channel breakout to the downside. Mirroring yesterday, so the exact opposite? Or the exact same? So far we've been the opposite. As it is when you look in the mirror. Yes. Who's still holding top in chat? I know some of you are. Top. 32%. We have, what's our next resistance? Break all the resistances. This sketchy Chinese company. Ripping up there, about to fill that gap. Yep, it's repeating the same pattern. Getting pretty awful entries though. The VWAP buy would have been nice. Not awful, just not great. Trucks.
Oh, and then you have mining and oil and gas that are pretty stable after
Heavy
many years of
machinery.
underinvestment. We're not expecting anything to write home about in the next couple of years, but we're not expecting the dip you would usually see after a brief growth period.
This real numbers got some great weed
in recent history. So I think oil and gas will be stable.
What does 8 smell like?
Mining will be mining equipment stable. Data centers is going to be very strong. That's, you know, close to 10% of the revenue. And we like the infrastructure.
That's good. Good discipline,
you know,
Bubba. If you're not trading
factor.
today,
That's
well done.
that's additional to the current cycle.
That's
I also
not
agree
easy,
on all the
especially
things
since you're
that,
sitting here looking at it.
sorry, I also agree on all, you know, on all the things that Doug said about Deere. It's a very, very high quality company, impressive execution. We just don't see that additional atypical component for the current cycle in ag equipment.
Yeah. And Doug, when you look at the big picture here and you think about the economy, and there's other construction stocks, we were putting some up there like Cummins and Snap-on, and what else are you watching closely? You're waiting on the Fed, obviously, in September. We have a China story looming. Economic growth has slowed there, coupled with a lot of debt for a lot of the property developers, and that's weighing as well. Your final thoughts on the big picture, Doug?
Yeah, I think like most people, we're kind of waiting to see if there's any kind of a slowdown in the U.S. economy. All the indicators seem to suggest it's chugging along and growing nicely, and in spite of these interest rate increases. So it's a little bit of a befuddling situation that this recession has not materialized. So we're all kind of waiting to see what happens there, whether there's a soft landing or this no landing that people are talking about. It's a very strange time right now, not really following the historic patterns that we've had in previous rate increase cycles.
Yeah, and Matt, just a couple of seconds, but the infrastructure packages from the government, how long do you think that some of these companies can reap benefits from that?
I think we're still in the early innings, Nicole. I think, you know, definitely 24, 25, most likely 26.
Volume's still increasing on
that,
top. That's good.
You know, we'll have to wait and see.
Yeah, Doug Astrop, Exponential Investment
Up, coming down a little bit. Well, still in the flag, I guess.
Thank you both for being here. A good look at Deere and some of the other names. Appreciate it. Good to see you. That's going to do it for us here on Trading 360. I'm Nicole Petalides. I see you every
Spike
single
and break
day
out of this
at 11
channel.
a.m. and 2 p.m. Eastern,
The upside.
live from the New York Stock Exchange. I'll see you at 2 o'clock for the watch
More
list.
aggressive.
Right here, Fast Market is next.
As Bubba so eloquently put. There's the pre-market high. And some off. Always get back in. Red Kindler on top. It makes its way back to VWAP. I went from red to green there on that little break. AMC is flat. GME is flat. Barbecue still hanging out 4.2%. Hawaii back to VWAP up 9.6. I pull out of the rest of them.
Trending name.
Oh. It's kind of cruising by. Already noon. Noon. Blue noon. You have me standing alone. Op consolidating up here. Reaching. Reaching. You, Bubba. Hmm. Base up 4.2. Nice to see an engulfing candle though today.
So that's a pretty important area for us to stay close to and hold
There's no...
as we get to the end of the day. But the difference between today and all the other days that might bring in some dip buying is pretty sharply lower yields in the 10-year. And so the dollar is soft. 10-year yield is lower. Crude is only slightly higher, but basically close to unchanged. And we're hitting some technical levels that may bring in some two-sided paper, Tom, and some buyers. But as you know, it's a long trading day today. It's already been a long day. The market opened up pretty sharply lower based on the overseas markets. Holding pretty well here, though, so far. The comeback is pretty impressive, but the day's not over yet, Tom. How we end the day, how we end the week, very important.
Yeah, I agree with you there, Kevin. Maybe a little bit of a technical bounce here. Now let's bring in Joe Mazzola, Director of Trading and Education at Charles Schwab, to join us. Joe, I wanted to get your take here on markets because, all four of the major indices down over 2%. The Russell down over 3% so far this week. We've struggled a little bit. Are you surprised by the market action at this point, or is this probably an overdue, semi-correction in your opinion here?
Yeah, I would err to the side of the latter on that one, just because I think that, we've been talking about earnings declines, even though they were beating expectations. We were still looking at 6 to 7% year-over-year earnings decline, and put multiples in the S&P 500 around 21. And that's fine. That can continue when you're in a lower rate environment. If anything, as Kevin mentioned, we've seen yields really start to take off in the last couple of weeks. Yes, we're getting a bit of a reprieve today, and maybe that's one of the reasons you're starting to see some equity buying, as Kevin had mentioned. But when you got all the headwinds kind of lined up against you, as the market's seen, and then add to that, I found something interesting. Goldman Sachs was talking about the idea that, or the fact that, looking at some of the prime desk flow that they've seen, the hedgers that have been coming in, they've been boosting their short sales in 8 of the 10 sessions through last Monday. And if you look, just halfway into this month here, halfway into August, the dollar amount that they've allocated to those short sales more than covers, or more than doubles, the positions that they had to use to cover some of the short positions in July. Meaning that, the shorts are continuing to pile in as the market starts to roll down. Now, that's actually could be a good thing to a certain extent, because what do we know about shorts is that at some point shorts have to cover. We just don't know exactly where that level is right now. I think investor sentiment, starting to decline pretty quickly here. That's something that we've seen from the National Association of Active Investment Managers. They're showing that equity exposure slipped from its highest level in July, now down to in areas that we hadn't seen since November 21st, where that sentiment started to pull back as well too. So you saw peak multiples, you saw peak bullishness, and that all started to kind of roll over fairly quickly, and you get the shorts kind of getting in front of that, and that's where you can see kind of this precipitous fall.
Yeah, definitely. I look at this market, and the S&P 500, NASDAQ 100, Russell getting close to oversold areas as far as our RSI levels go here. Kevin, when you look at this, the Fed minutes were relatively hawkish at this point, so maybe this pullback was warranted. Valuations on the S&P 500 moving forward on a 12-month basis still elevated at this point, but is that like what we're going to hear? Because we have one side where the economy is robust, right? GDP growth is expected to be anywhere from 2 to, if you listen to the Atlanta Fed GDP now, it's supposed to be over 5% for this coming quarter. Is that kind of fighting back against why we're seeing yields rise? Because it doesn't seem like a normal yield environment where we're seeing those yields rise in this type of setting, and nobody's, people are selling equities, but nobody's pushing into bonds either.
Today's the first day, Tom, that it appears that China, the news out of China, is starting to affect bonds and yields, right? It was affecting stocks earlier in the week, but yields were going up all week because of We had strong economic data across the board. Not a big week for data, but retail sales. And you mentioned that Atlanta Fed number that keeps moving hourly, it seems like. The U.S. economy is not the Chinese economy. We're strong, and much to Jerome Powell's chagrin, it's getting stronger. So the question is, what are we doing the next week? What does Jerome Powell say when he looks at the data that's getting stronger? But much like the banking crisis in March, he's got a China issue that he can talk about and what that effect will be on the overall U.S. economy. So there's some cross currents going on here, but boy, the U.S. data is still strong, guys. Next week we get durable goods. We'll get consumer sentiment. Again, not a big week for economic data. Some PMI data on Wednesday. But all things considered, this is a perfectly healthy correction in the market. It's interesting to see what happens, though, around some of these technical levels, Tom. That's the difference between a healthy sell-off and a tone change.
Yeah, definitely. Joe, speaking of levels, I've got a chart here of the S&P 500 companies within the S&P 500 that are actually, above their 50-day simple moving average here. It's at 35% right now. So we've seen that parabolic slide.
GME is green 1%.
This gives me a little bit of cautionary tone at this point. But if you look at that level from about 10, 11 months
Barbecue's
ago,
still there,
it's still
4.7.
in an uptrend where maybe this is a technical bottom because sentiment's still robust as far as the consumer confidence and sentiment numbers are. But at the same time, now we're starting to see a little crack in equities. Maybe that wealth effect comes into play here, right?
It does, and I think that you guys touched on where the RSI kind of approaching some of that oversold area, and the S&P I think it's around a 35 or so, 34 right now. I look at this as I don't see capitulation yet. I don't see kind of that mass sell-off that you would see. A 5% correction, as Kevin mentioned, is probably pretty healthy. Could there be more room to go? I absolutely think there could be more room to go. Maybe not too much further, but you do want to see the VIX get above and hold above 18. We talked about this the last couple of weeks that the VIX is establishing a new range now. It got all the way up to its 200-day moving average, which is around 1870 today before kind of paring back some of those gains. But it's been higher highs and higher lows for the VIX. And I think that you're starting to see, we talked about the short sellers are coming out in full force. We're starting to see the hedgers too. A lot of that call skew that we saw in some of the equity names earlier, when we were talking about that in June and July being kind of a warning sign as to, hey, I think, investor sentiment's getting a little bit too bullish here. We talked about that. That's really rolled over now too. You're not seeing that same type of ratio. So, I think it's healthy for some of this sentiment to get a little bit more bearish, and even maybe a couple more percent move on the downside, and then maybe you'll start to see, some of those buyers step in. But I think it really all comes down to, as Kevin was mentioning earlier, it's the yields. And good data is good. Let's be honest, good data is good. But at the same time, remember what's happening. I think maybe we all downplayed that pitch downgrade maybe a little bit too much, because what that's kind of meant is that the Treasury is now starting to issue a lot more supply, and as more supply hits,
Going to short
the
Siri.
market that's going to continue to push those
Yeah,
yields
they'll
up.
squeeze.
And, we have to kind of wait and see what that overall effect's going to be.
Joe, and real quick here, we've got the Jackson Hole Summit that starts on Thursday. Kevin and I discussed this yesterday. That 8-minute spiel by Fed Chair Powell last year kind of roiled markets here a little bit. Do you expect the same this year? Or this pullback in August, does that give him a little bit of a break or a reprieve at this point? Because we have seen some weakness in that asset bubble that we saw in July for the equity market kind of popped a little bit.
I think if there's one thing we can say about Powell is that he does learn from his mistakes, right? Or maybe not mistakes, but learn from history. And what I think he realized, and maybe last August was purposely done. I think he's very measured with his words, so I think he was trying to take some of the air out of the balloon. The thing right now is you haven't seen kind of that credit tightness yet. Credit conditions are still fairly easy for the U.S. economy, even though we're seeing yields push up, even though we're seing mortgages, over 7%. I think what time will tell in terms of how much that actually kind of pulls back on the consumer. But the retail sales number show there's still a strength with consumer. There is one piece of data. I know I keep talking about this every month, and I know it doesn't seem like it matters. But man, oh man, 16 months in a row for a decline on the LEI and negative print on leading economic index. Things that we haven't seen, or we've seen that twice. We've seen that in 1973 and 2007, and those were during recessions, not predicting recessions, but actually in recession. So, just something to kind of keep an eye on, this whole idea of the rolling recession we've been talking about now for a year and a half. It seems to just kind of be moving from sector to sector. So just keep an eye on that. Yeah, definitely. 16 months in negative territory. So, yeah, that's one that Fed watches, and I think that kind of gets overlooked on a monthly basis. But, Kev, your take here on Powell going into next week, it's like I mentioned, did the market sell-off here in August kind of help his case at this point? Because it seems like that needle he's trying to thread is getting smaller and smaller. He's going to have some difficulty next week.
Well, I believe that Jerome Powell's going to be able to hedge some of his bets by talking about China and talking about, let's see what, much like the banking turmoil in March, he's going to be able to say, we have to keep an eye on China and make sure that it's not slowing down the U.S. economy. He's got rates to a pretty nice restrictive level here, but he's also got strong U.S. economic data. So I think it's interesting. On a week that the Atlanta Fed came out and raised GDP almost exponentially to 5.8%, they also lowered inflation from 2.8 to 2.5, almost in the same breath that they were doing that. So, listen, Jerome Powell's got one job, right? With an unemployment rate of 3.5%.
I didn't know that was the catalyst on Series Squeeze.
And that is inflation.
Maybe. Makes sense.
Their rhetoric may be different than their actions. But they're not going to stop the rhetoric. He's going to keep saying
giving a dividend,
that they're fighting inflation and they're not done yet, much like Neil Kashkari just did.
What's different about that?
So, Tom, I expect the message to be the same. Doesn't mean the actions will be exactly the same, but the message will stay on point.
Like to see top. It's up again.
Yeah.
It's back to the highs.
Growth in GDP.
Just rip this thing to all-time highs, 256.
3.5%. So, good job
That'd
here.
be set.
All right, guys, let's take a quick break. When we come back, we're going to take a look at Palo Alto
Let's see y'all in
Networks.
Tahiti.
Cybersecurity company reports earnings after the close. Expectations have fallen pretty swiftly, with the stock off about 17% so far this month. Fast Markets coming right back.
We'll see if this is the top. You get a reversal. Got some channels here. Mostly so published. Just chill out. Did open up some puts up there. Once we had both those little small body candles with wicks. Excuse me. This bottom line, I don't know where this is. Kind of guessing. Hasn't shown where the support is yet on this channel. Stop getting frisky up here. NS hanging out at VWAP 1140. Brad doing down 6.5. Suck, Rad. Up right at that 61.8%. If SPY has one more of these patterns to play out, or if we're starting to get a reversal. So far, we're not seeing lower highs, basically. On the next one, if we don't see a high up here and it's a lower high, then we'll be starting to see some tapering of this aggressive up channel. I think we might be forming that inverse handle, depending on how today closes. If we get a drop below, I think we still could, even if we get a drop down here to 431. A final support. Oh, 30 market. Slow down.
So networks to Tesla, you know, he's reiterating an outperform, and he's maintaining his price target at 290. He did express some concerns, though, in his latest announcement that Q4 revenues and billings could miss street expectations, and I think billings is the key component to kind of keep an eye on. It's going to be guidance, right? It's going to be guidance going forward, but total billings specifically, they're projected to have grown by about 18% in Q4. So remember, these are the Q4 earnings for the Palo Alto Networks fiscal year. But that's also the slowest pace that we've seen since 2020. So really, there's this belief that there's this risk of this guidance downside, and that's why they're holding it on Friday. But you know, the other way to look at it is hey, if this is something that they got to get out of the way, and they're going to do it on a Friday night, they're going to hold a 2-hour-long conference call. Maybe it's more of a clearing event, right? You know, getting the bad news out of the way and setting up a potential, just wash all that bad news out, as opposed to a thesis changer on the overall sector as a whole.
Yeah, definitely. I mean, this could go either way. Speculation. I don't know. It seems like the stocks maybe made a move
today
to
set
the
up a
downside.
big inverse
when
cup.
that news came out on August 2nd, when they came out and said that they were switching the earnings to Friday after the close, this stock fell pretty sharply, and that was ahead of the Fortinet results. But Joe, you got an example
Fortinet,
trade
that's
in here
right.
for us. Option market's pricing at about a plus or minus 5% move in the shares. How do you want to look at this one?
Well, as you mentioned, look, the stock's already pulled back 20%, right? So it's, you don't know how much of that's been priced in. If we do kind of look at Fortinet as an example, and they pulled back 25%, well, another 5%, and you're basically kind of in line with what we've seen from the Fortinet news. So I'm looking at this from the perspective of, is the news already baked in? And, giving myself a little bit of a cushion on the downside, selling the August 25th. So remember, don't sell the August 18th, because that's not going to have these earnings priced in. Those will already expire by the time these earnings come out. So make sure you guys pay attention to that. But these are the August 25th. Looking at the 192.5 versus the 187.5 put vertical. You could probably do that somewhere between $1.15 and $1.20 right now. Let's say you get $1.15 as you have on the screen. That's your max profit, meaning you're going to be risking about $385 to make $115, or $385 to make $115. it gives you a little bit of room. Right now it looks like the stock's at just shy of 208. And so the idea is this: how much of
I
this
mean,
is already
it's right where it
priced
wants
in
to be. It's
versus
at
how much
VWAP,
of this,
so it's a happy
the
place.
news that comes out this evening
It's
could
good.
affect this.
It's showing nice
It's a binary
consolidation
event, guys.
support.
I mean, that's
nice. It's
one
above
thing
that
we know
50%.
is
Honestly,
whatever happens tonight, it's going to have a pretty massive
so
effect
I'd
on
let
the,
it
on the
chill
stock
and
price on
keeps
Monday.
trading
So
flat.
it's really
That's good.
weighing the risk reward of this trade versus the
You just want to break
possibility
this
of the
resistance
move.
and then set
I
up
guess
some
the
kind
good
of
news is that since
formation.
these
But you've got a big
are
engulfing there on
Monday,
the hourly, which is
since
nice.
this is a trade that will be affected on Monday, you've got the rest of the week.
Need to build kind of another shoulder over here, an inverse shoulder.
As opposed to just doing it on a one-day
I
trade.
just got that time played out.
There's a couple things that are setting up, I think, okay for this trade. It's the fact that if you look at kind of some Fibonacci retracements from the lows that we saw back at the beginning of the year in January to the highs that we saw in June, that 50% retracement's right around that 195 level. You've got the 200-day, moving average is right around 190. So, I mean, there are some areas right there where you might see some buyers step in, but this is really all about guidance. It's going to be all about guidance going forward for the rest of the year and really probably 2024, because everybody's going to be waiting to see is, hey, was this
made a new high there,
thing, or is this something that's hitting that whole sector as a whole?
Yeah, and they're really ramping up their cost efficiencies and expanding AI capabilities, which kind of sets up well for the cybersecurity industry. But let's go over this example trade. August 25th, weekly cycle. I love Joe's point here.
7%. I think I sold out of my root.
If you did this
I still have this.
week's expiration, you wouldn't capture that earnings.
Dumpster fire stock.
Expire before the earnings are
I'm
released.
in it for the squeeze now.
Selling the 192.5 strike put.
I don't know what squeeze, but
187.5 strike put.
been for it.
Neutral to bullish, short put vertical, $5 wide. Collecting about $1.15 credit. Might collect a nickel more or more than that because stock has pulled back just a little bit. But if you collect $1.15, it takes your break even down to 191.35. That's just above that 200-day moving average that Joe just mentioned. You got risk about $385 per spread on this one with some assignment risk into the close today. Kev, your take here, you got a 70% probability of that 192.5 strike put finishing out of the money, which is what you want, right? That's why you're probably not collecting as much as you'd like on a $5 wide spread, but you got better probabilities, right?
Yeah, Joe went right to the 70 percentile probability of out of them on 192, 187.5. You've got some risk. It's not without risk, right? But you do have all week for this to play out, right? The stock could sell off and come back by the end of the week. When you trade an event like this, it's purely based on the news that comes out and the shock and awe of that news event. And so if it's flat, if it's down small, or if it's up, this trade is a winner. The only loss is a catastrophic move to the downside through really 191, let's call it 191.25 is where this would break even. And that's where the exposure comes down below that. But besides that, 3 of the 4 scenarios it's profitable, it is high probability, it's collecting theta, it's risk defined, guys.
All right, great rundown there of that trade. And thanks to Joe Mazzola, Director of Trading and Education at Charles Schwab. Joe, we'll see you next week when we are officially Schwab Network. We're looking forward to that. All right, coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for a discussion on Expedia. The travel stock has taken a hit this month and is down about 13% in August. Stick around. Fast Market's coming right back.
SPY melting down 12:30 on the dot. If you guys haven't, thumbs up the stream. It really helps me out. I appreciate it so much. Thank you to the 17 of you that have. We're in our final hours of the week. Hopefully you practiced self-control, discipline, good risk management this week. Nice consolidation on top up there. 3-day rally would be so sick on this thing. Good volume. My head hurts. And for those of you that don't have Webull and are wondering about a new brokerage, use my link. Deposit, and you'll get like 6 free stocks or something. Someone that recently did that, recently did it, signed up, and I got a share of Apple, a partial share. And so did the person that signed up, so free stocks for all. This platform's actually pretty good. I think I'm going to transfer my my Fidelity. I think I'm going to bring it over to Webull. I can trade from 4 a.m., which is nice. None of my other brokerages can I trade that early in the pre-market. Done none of those things? Yeah. Well, stop, reset, start building good habits with paper trading. Be habitual about it. Risk management. And then you'll be learning not to gamble. Start trading as a business, of a profession, whatever. Unless you want to gamble. It's here for the hits. Here for those dopamine hits, man. Or, if you don't have the time, be more passive, learn about selling options. We have a Theta Farm membership on YouTube where I share my Theta plays. I think it's probably one of the best ways to passively make money in the market. Takes out a lot of the... You can still gamble with it. You can always gamble in the market, but it takes out a lot of the opportunities to gamble. Unlike just buying or selling shares or buying or selling options.
This kind of makes sense to us because it really feels like consumers are opting to travel overseas and visit cities, which makes Expedia's VRBO brand and Airbnb booking services less ideal than what Booking really offers, and where Booking is strong is on the international side. So we really think of Expedia playing catch up to Booking when it comes to consumer convenience, and we think that trend will continue. We think Booking will continue to outperform Expedia, who will continue to outperform Airbnb.
You know, Andy, when I look at some of your charts, it looks like Booking Holdings, correct me if I'm wrong, it looks like Booking Holdings is kind of, establishing itself as the number one.
Don't know where
booker.
the top of this
now,
trend
Airbnb
is. I'm kind of just guessing based on the
bit
bottom at this
right?
point.
Because they're their own universe. They're not using other places. They're booking their own things. But here's my question, Andy. Do they need, if the prices were to come down, if the overall prices of travel start to come down, is that better for these companies, or is it worse? Because at these high prices, it's kind of like interest rates, right? If the overall prices come down, picks up demand, their traffic will probably bring in some buyers that may have been priced out of the market. What's your take on lower prices mean more people visiting these sites.
Yeah, I think we're kind of stepping into an economics one-on-one class, right? The elasticity of demand, how much can volume make up for price? Look, I think the real important thing when you look at these three companies is the mix of what the consumer wants to do. The more international and urban the travel is, the more it benefits Booking. The more inside of the United States, the more local, the more rural it is, the more it benefits Airbnb. And the real shift that we've seen that's made a ton of difference in this race is really consumer preference for knowing what they're going to get when they get there via a Booking hotel, via an Expedia hotel, and kind of getting tired of that, how many fees am I going to have to pay at Airbnb?
That's always been a thorn in my side, why I don't like Airbnb that much, is because you just don't know the pricing. Now they've
changed it
that with all the fees and stuff in
They've done it months ago.
Andy, when you look
now
at
it shows the total
levels,
amount.
you mentioned international travel. Booking's based overseas, right?
Once you get a reputation, it's hard to shake it.
By a lot of people that travel overseas. Expedia is probably used more domestically here, but when you look at happiness levels between these two, is Booking always going to win that fight? And I know they just had earnings. It was a pretty good report, kind of in line on revenue, but at the same time, would you what would be your opinion? Because it seems like the sentiment number is still above the stock price, according to your chart.
Yeah, I think, it's reasonable to expect a little bit of pullback in the entire travel sector from here. It's had a really good run. We continue to see Airbnb struggling to keep up that consumer enthusiasm number, whereas Booking and Expedia are delivering and hanging on there in terms of consumer happiness. And when I think about, maybe how I would trade this, how I would think about investing in this sector, I really think if you're looking to be bullish on the travel sector, Booking is probably the best bet. And if you're looking to be bearish on the sector, Airbnb is your best bet. And so that's the way I think about it. And then you just kind of have Expedia in there as kind of the middleman, kind of working his way through, and we'll see where this ends up. But so far, Booking outpacing Expedia and Airbnb is the story for us and the way we stack rank these companies.
All right, great stuff. Great data as always, Andy. Appreciate it. Have a great weekend.
Can't wait to see you on Schwab next week.
Yeah, Schwab Network next week. We'll see you there on Monday, Andy. Appreciate it. All right, we're going to take a quick break here. When we come back, we're going to take a look at Apple. Stock is now severely oversold on a technical basis and has cratered over or nearly 12% so far this month. Fast Market's coming right back after the short break. Oh, I'm sorry. We're going to go to a trade here with Kevin. My apologies. Jesus. I'm looking at something, Kevin, and thinking about something else. But let's get to the Expedia trade here, Kevin. The stock's right at its basically 100-day moving average at this point. It's still up 20% so far this year, but it's pulled back pretty severely this month. How do you want to look at this from an example trade?
Yeah, they had a nice earnings per share beat in the last earnings call, but the revenue was light, and they punished the stock for it, Tom. And like I said, if these numbers are starting to soften, which the data says it's starting to, you're starting to hear that, I think these stocks could go a little bit lower. So based on Likefolio's data, based on the sentiment that I'm reading, I went with the 2 week.
Maybe it bounced. Maybe my channel's too wide.
September 15th, about a month out, about 4 weeks out, and then the September 1st 100-put calendar spread. And that's trading right around between 70 and 75 cents, Tom. But that gives you, a relatively inexpensive way for a little downside play in Expedia. And it's only, like I said, it's not that big of a move down to $100. It looks like on the chart that it has some support, a lot of support around, between $85 and $90. There's a lot of support. But if it can get down towards that $100 level, Tom, this could be a nice little winner. And like I said, I've given you a month for that to happen. So we'll see at the end of the summer how this all plays out. But that revenue miss last quarter, you see on the chart, they punished the stock, Tom, and now it's getting near that 200-day moving average, which is 102. So even if it goes there, I think this trade will be profitable.
All right, Kev, let's break down this example trade and not go to break. Let's look at the trade here. 2-week wide, put calendar to the downside, buying the September 15th 100 strike put, selling that same strike in the September 1st weekly options that expire in a couple weeks here, paying roughly a 75-cent debit. That's your risk, $75 per spread. But you see the break evens that Kevin mentioned. While you're picking the 100 strike, you've still got a nice wide range for this to trade in. You've got that event risk gone from the earnings event that's already passed, so implied volatility is lower, which means that calendar spreads are going to be a lower price point entry and lower risk on this one. You've got break evens between about 95 and 106 on this one, so you don't have to be perfect on calendars. I think we mention that all the time. And the implied volatility levels are about even across the board between those two option series. Also, you do have some assignment risk on that short strike going into September 1st weekly expiration over the next 14 days. So keep that in mind. But this is definitely
I'm selling out a couple puts there. This channel threw me all off.
About $8 below.
Bounced like perfectly on that, so
in Expedia,
maybe my channel was too
that's
wide.
one of the nice things about calendar spreads. You buy them in low volatility environments. If volatility expands, if the stock falls, that'll also expand the price of this calendar spread. You'll have that ability to roll that short option at least once into the September or into another weekly cycle, creating credits and reducing risk and increasing potential profitability on that one. Also, if the market's open and liquidity is provided, if you're doing some trade management or rolling on that short option. All right, now we're going to take that quick break. Come back, and when we come back, we're going to take a look at Apple. Stock is oversold, as I mentioned, down about 11.5% so far this month. Coming right back.
Yep, I think it was. Whoa. Whoa. Kevin made a boo-boo. Yeah, man. So a break on this channel, that's when you'd want to go long.
I'm looking at around the $25,000 level as an area of support. And if it breaks that, then we could see some further weakness in crypto and in Bitcoin. Hopefully we don't see it go by that much. But right now, that selling pressure on high volume is really pronounced in the marketplace here today.
Yeah, Oliver Rennick's been talking
GNS
about that. We
popping
haven't
up
had
a little
any
bit off of
critical
VWAP
levels to
there.
the downside yet. And then you've also got to figure, Kevin, that there's probably a lot of pressure here just from risk-off kind of trading at this point. So maybe that riskier asset in crypto taking its toll also. All right, thanks.
I don't like
Kevin
the risk
Green,
reward though on
market
this long.
correspondent here breaking down the
don't know.
Bitcoin story. But now let's bring in George Tillis. He's a senior
You've already
market
filled the gap,
correspondent.
I guess
George, I
we could
wanted to
keep
bring
going.
up this stock today because I tweeted something out yesterday just about the levels on a technical basis for Apple. To see it fall this much, the RSI got down to levels that we haven't seen in over 3 years, so severely oversold on that chart. But what's the background on it? Is it deserving of that downtrend that we've seen so far this month?
Yeah, I think that's the issue. I mean, looking at it, it was just close to $200 not too long ago, and it's falling, of course, in sympathy with the rest of the market starting in late July. But you know, I also agree with you in some sense. I mean, it's been a pretty exacerbated sell-off, probably a rapid one compared to any historical sell for this particular company, at least in the past 15 years, and it's starting to perhaps look compelling or interesting. I talked about in the panel earlier today on Morning Trade Live that we could see a bounce in the markets at any point in time because of the technicals, a little bit oversold in the short term, but nonetheless, we have to consider that we may end up closing lower from a technical standpoint 3 weeks in a row with the bears in control. At
It's
least the
climbing
last
up a
2
little
weeks.
more
But
here.
look at Apple again; it's starting to look interesting. I think
Yeah, I wish I
have to
actually had this
consider some of
Webull
the
channel. That was
catalysts, at least on a forward basis,
more accurate than my
considering they are
channel on the
going to be
Wix.
releasing or expected to release in early September
Interesting.
the new
It bounced right on the
iPhone
bottom of that
iPhone
channel,
15
more or less.
product lineup. That's going to be a huge catalyst. I think that's going to be probably a successful launch because not just new technologies and features,
Let's see if this next
but
high
I
is
think
not quite as high.
the cycle,
That'll
if
be
you
a
will, the
sign we could
uptake in terms
maybe
of
start to go short
renewal
again.
cycles. You have to think about COVID. About 3.5 years ago, that's when a lot of folks, including myself, updated their technology, including computers and phones. And I think it's going to be
All right,
a
Bubba.
season where people also start to update their hardware. And you have to think about the ecosystem that is vertically integrated with Apple, and of course the other service provisions they offer. They have 2 billion current installed user devices. That's not total sold. That's 2 billion current. So to give you a scale of how big this company is and the outreach that it has, it's pretty remarkable. Now, looking at it, if you consider last quarter, they reported sales were down about 1%. Service sales were higher by 8.5%, which is a good thing. But again, considering the technicals as well as forward earnings, they're estimated based on yesterday's close about $6.06 a share in the next 4 quarters, which really puts a 25 multiple of the stock. If that's going to be the case, it's trading around 28 times right now, somewhere in the $151 range. And that is, again, its 5-year historical valuation multiple. Which it certainly could hit if we do consider this correction to manifest a little bit longer than these last 3 weeks we've seen.
You know, George, there's a lot of positives here, but some negatives, right?
Yeah.
Some of the news that facilitated this downward move are the revenue declined
See if we get a
across
double
all
top here.
product segments in this last earnings report. 4 quarters in a row of declining sales. Now, there's some good news. Services is getting better. There's new products. AI is on the horizon. But George, which should we pay attention to here? Is it the concerning news? Remember, this still makes a lot of its money off iPhones. Is this iPhone 15 going to be a game changer, or do we got to hope for the future in some of these new products? Because sales right now, as I've just said, are declining, George.
So I think that the story here for Apple, at least in the last year, is obviously multiple expansion with the rest of the market. That's part of what we've seen. The other thing is services revenue, which again, based on last quarter's numbers, were higher by 8.5%. So that certainly offsets some of the declining hardware sales. I think at the end of the day, the hardware sales going forward, at least in the next 3 to 4 quarters, are probably going to be more important than maybe the services revenue because of the cycle upgrades that I expect to see across the board from consumer standpoint. And I think that's going to be important.
Yeah,
The other
Gina's
thing
taking a
is
little
we don't
bounce.
necessarily know if they're launching any new particular products.
Bouncy
I'm
bounce.
not a tech wizard and I don't follow it too closely. I don't think the technology upgrades for the iPhone 15 are going to be a game changer. But I think at the end of the day, we may have seen a situation where in the last year, two of the reasons sales were down. One, inflation caused people to put off purchases, and two, the technology cycle. People may be waiting, especially in the last couple of quarters, for the new phone if they are people who are those who are serial upgraders and they want to upgrade every single year. So I think this will be a moving event for Apple in terms of the guidance they provide for sales of hardware. And keep in mind that services have been growing, and that's an ecosystem that's difficult to break away from because Apple effectively has sort of a monopoly on services, including financial services and savings, and all the way to Apple Music and media, and of course streaming music.
Yeah, don't forget about Apple TV Plus. They said MLS signups for that ever since Lionel Messi came on board are going to be astronomical. So maybe adding to that services side at this point, they've got better margins on that side too. All right, great stuff as always, George. Appreciate it. That's George Tillis, senior markets correspondent here, breaking down Apple. Kev, I looked at this one, and I mentioned the RSI levels. It's still about 28,
coming down
so
here a little
oversold.
bit.
Anything under the
Low
30
VWAP.
level on an RSI is considered oversold. It got down to about 24 earlier in today's session. But when I looked at this, it's pulled back nearly $25 from that all-time high of about $198 just about a month ago. And it pays a dividend if it gets paid out by the company, about 0.55% dividend yield on this one. So we looked at selling like an out-of-the-money short put, right, Kevin, where a cash-secured put, if it goes lower, you can buy the stock at a cheaper price. But I looked at this from a dividend perspective if it gets paid out. So I looked at a covered call strategy here, Kev, where for every 100 shares of stock you buy, you sell one of the September 180 strike call. That's out of the money by about $6 to the upside. You've got 28 days until expiration on that one. Kev, give me your take here because I know we'd like to talk about cash-secured puts quite a bit, especially when a stock's been hammered the way that Apple has post-earnings. But they're all about trade-offs, right? And when you look at stocks that pay dividends, sometimes maybe a covered call may be another way to do that, right?
Might have a little more push higher, but
yeah, that's usually
we might be in a double top.
The differentiator with a stock like this. If you're choosing the covered call versus the cash secured put, it's the dividend, and you'd be eligible for the dividend owning the stock. And if Tom, the profit graph on a cash secured put is virtually identical to the profit graph of the covered call. Now, there's risk down to zero in the stock and the cash secured put. The amount of premium you can make is only the amount of the call here, but this is options trading 101, Tom. This is
also showing some tapering at the top.
Trade that everyone should make,
right?
And they should sell out of the money calls against your long stock. You have to do it. You have to educate yourself. You have to learn how to do it. You have to know the risks involved. You have to understand the dividend and how to stay safely from getting exercise and assignment. But Tom, a covered
this
call
confirmation will be
strategy
breaking of this
should
channel.
be, in theory, if you're educating yourself on options.
I don't think I'll add, but I might.
Yeah, and the price here, we got 171.70. Stock has moved up. It's probably trading closer to 172.30. But you do have a cushion to the downside, so you're buying the shares at a discount because you sold that upside call against it. You got about $17,200 in risk on that also if the stock were to go to zero, so you got to keep that in mind also. All right, great look at that covered call strategy as a way to play that to the upside. That's going to do it for Kevin and I today here in Fast Market. Don't forget to tune in on Monday, the launch of our rebrand. We're getting fired up to become Schwab Network on Monday, the 21st.
We'll be looking forward to that, Kevin. First take profits. First take profits will be at the bottom of this channel. Then maybe 435. Or you could just wait for VWAP. Yeah, see if we're setting up an inverse cup here though. For the rest of the day. Got plenty of liquidity up here for a shoulder. Some here for a shoulder. Got seemingly a double top here for a head. A shoulder over here. Shoulder over here. This is Weeble's channel. I'm not quite sure exactly what it's based on yet. Is it one deviation? B. In case I'm wrong, we're at the top. L1. You like it though. Top's coming down a little bit. It's below VWAP now. Just don't give back all of your gains, top. Tupperware back to VWAP. HE's just been at VWAP. And with GME. All the stocks are at their happy place. Got a little head, shoulder over here on the break of this channel. Here we go.
Officially now into
correction
territory, joining some other names. I mean, like an Amazon, Tesla's actually in bear market territory. We'll discuss that more and why analysts still really like this name later on. Then we'll look at SpaceX, which is perhaps being blamed for Bitcoin's demise today.
What?
Last but not least, our under 30 name today is
SpaceX.
Which is lower on the session after some lackluster earnings and disappointing guidance.
Come on.
SpaceX to blame for Bitcoin's fall. Now, this is a headline that I'm not necessarily surprised to read, but like this just goes to show, I think, Bitcoin and just how difficult it is to understand this thing.
Bitcoin runs with the market. Sometimes front runs. Oftentimes front runs. Market's coming down. Bitcoin's already coming down.
A couple weeks since we've really dove into that particular name. So one of the
moves
moves
it lags, I suppose.
Looking forward to covering that for FOMO. But let's kick things off here as we do, Jenny, with upvote, downvote, not endorsements, not recommendations. First one here on the list is CVS.
Okay, we're at a support here. Another little take profit spot.
And I'm seeing some nice prices today. It's up about 0.4% after falling over 10% for the week. So it has seen some pretty brutal selling, particularly yesterday's session when we did get news that they were pulling out. We saw Blue.
Yeah, we might just have a
California moving away from CVS
horizontal channel up here.
Benefit manager
But we actually come down.
and instead partnering with 5 companies that include Amazon for some integrated pharmacy services. So shares did sell off yesterday about 8%. Today we're seeing analysts
we're building right now.
Edwards Jones did downgrade CVS to hold from buy, expressing concerns over the company losing part of this major contract, saying this does create uncertainty for the pharmacy benefit manager industry. Now, on the other hand, we saw an RBC analyst actually say this sell-off was overdone, saying they believe the threat of Amazon as a disruptor in healthcare to pharmacy benefit managers is more limited actually in the near term. Now, CVS did say in an 8K filing, however, they expect this decision from Blue Shield of California to not impact its full year 2023 adjusted earnings and operating cash flow guidance, nor its long-term outlook. So I thought that was a really good point that RBC made. They also say there is this concern that Amazon will be this really disruptive force in healthcare, but they remain skeptical of really what that will look like more in the long-term picture. So I think it's interesting to look at the two ways the analysts are viewing this. One says it's overdone. One says this is a major headwind for the midterm here, but CVS has been lackluster even outside of today's move to the downside. Shares are down about 28% now on the year.
Yeah, stock actually has turned around a little bit, though intraday as it's up slightly, about 1/3%. So not the worst close to the week, but when you talk about its performance over the last year and year to date, obviously been an underperformer, down quite a substantial margin. But when we talk about this, another thing that stuck out to me was, you know, analysts tend to be in agreement that the selling is largely overdone. It's just whether or not they feel the stock's going to bounce back from here. Of the 29 analysts that Bloomberg covers here that are following this stock, 20 of which, so just under 70% of these analysts, have a buy or better rating, with the other 9 in the hold camp, 0 in sell. So certainly a name that there is a disagreement about whether or not it can bounce back, but largely consensus that the selling is possibly mostly over. Next one here on our list, though, is a retailer on the verge of reporting earnings next week, and that is Macy's.
Macy's. So I will say that I know earnings season is coming to definitely more of a crawl-like pace, but we have so many retailers reporting next week, similar to actually what we saw this week. Names like Urban Outfitters, Abercrombie &
Top
Fitch,
holding
Dick's
support
Sporting
on
Goods,
VWAP.
and of course names like Macy's. So Macy's is up about 1.5% today. They have now guided for net sales falling about 5 to 5.1 billion, with analysts projecting revenue at the higher end of that range, representing a drop of about 9% on a year-over-year basis. Now, in the first quarter of this year, net sales did drop 7% year-over-year. As far as adjusted earnings go, the street is forecasting about 13 cents per share, well beneath the $1 per share they earned in the same period a year ago. They continue to be pressured by some challenging economic environment and shifts in consumer spending, which is sentiment we've heard pretty much all week long. Comparable sales did fall almost 8% on an own basis and 7% on an own plus basis. These pressures are expected to continue into, of course, the second quarter. And now we also are seeing the fact that this name, as far as analyst coverage goes, 5 buys, 9 holds, 2 underperforms. Average price target does imply some upside from here, but this name is definitely more of a muted, neutral stance from the street.
Yeah, and we've really started to see, I think, within the retailers sort of a separating of the wheat from the chaff, if you will, Jenny. It's been a story of winners and losers. And even some of the names that have been winners, like Walmart, doesn't even mean that good earnings can be enough for a rally. So I'm excited for this particular report, but it's certainly a company that has been struggling the last few years. We'll see how it's weathering this somewhat deteriorating economic picture. Next one on our list is Lowe's. The home improvement stores have been on a bit of a roller coaster the last, let's call it 3 years, going back to the pandemic, where they saw tremendous demand pull forward. But now those kind of whiplash, bullwhip effects have sort of worked their way through after struggling, let's call it the last year or so. Lowe's is up small and is expected to report earnings next week. This is now post-Home Depot earnings as well.
Yeah, so Home Depot, I was shocked to see shares actually rally, at least initially after their report, because we did see some weak spots, which I guess maybe it wasn't as bad as what perhaps would have been feared. Home Depot is up almost 4% on the year. Lowe's is slightly better than that, up about 10% on the year. They are expected to post a decrease in their top line on a year-over-year basis of around 9%. We did see they delivered an earnings surprise last quarter of around 5.5%, and over the last 4 trailing quarters have delivered an earnings surprise of around 3.7% on average. Results are expected to be weaker, though, due to this tough operating backdrop, including some of these inflationary pressures as well as currency headwinds. Additionally, a stronger than anticipated pullback in home improvement spending as well as lumber deflation are expected to act as major headwinds for this earnings event. On their last earnings call, management had projected nearly $400 million headwind to their sales in their fiscal second quarter, owing to a timing shift in the company's fiscal calendar, which I think is important to note. But lumber deflation just continues to be mentioned by so many analysts here. They have been focusing on really expanding their omni-channel retail capabilities and their store operations.
Oh, it's coming down here.
We do know from Home Depot, these companies' pro businesses tend to do really well.
You can get a full inverse cup on the day. 1 o'clock. We got 3 hours left.
So this name, I mean, comparing to Macy's, I know they're totally different, but as far as
probably and
analyst
dance.
coverage goes, 19 buys, 14 holds, 2 underperforms. So this name definitely skews more optimistically from those analysts covering it. And the price target at around $238 a share does imply about 9% upside from here.
Yeah, and this is always an interesting one, too, around its earnings event, just because it goes after Home Depot usually. And as a result, they're just these companies have so much overlap in sort of the type of business that they do that you can kind of get an idea from Home Depot's earnings roughly how Lowe's will shape up. There's always individual company nuances that lead to some surprise, and there's always that opportunity for that surprise. But you typically do see a little bit less volatility in the Lowe's earnings release, absent that surprise, just because we've already heard from Home Depot. But usually they're like a day apart, so the fact that we have the weekend in between may complicate that just a little bit. Last one here on our list, Jenny, is Bloomin' Brands. This is one that those who are watching from afar may know it more as the parent company of Outback and Carrabba's, Bonefish Grill, Fleming's. So those are some of the names that are underneath this umbrella.
Yeah, really the one that sticks out to me is Outback Steakhouse, because Bloomin' Brands, I have to imagine, takes after the blooming onion, of course, which I have had way too many times in my lifetime. But this name up almost 7% here on the session after activist investor Starboard Value confirmed it had about a 10% stake in the company. Now, these were per Wall Street Journal reports that said Starboard has built this stake, making it now one of the company's top 5 shareholders. Starboard's intentions for the company does remain pretty uncertain at this point, but in the past, some of these activist investors have urged Bloomin' to reduce its expenses as well as separate some of those key brands that you just listed. Starboard is known for campaigns, including actually one-time stacking really against Darden restaurants just nearly a decade ago. So we have seen Bloomin' perform really well this year. It's up about 36% on the year. It is one of the very few names I have been able to find that is actually higher this month, up about 2%. It is still hanging on to its week-to-date gain, up almost 9.5% now with today's nice rally, and it's up a whopping 52% off its 52-week low. So compare that to its closest competitors like a Darden restaurant or a QSR. QSR is up 7% this year, Darden's up 14%. This name has been fairly resilient, and it's actually, I mean, historically been slightly, in terms of its valuation, slightly beneath those peers I just listed. So analysts really like this name now. Its market valuation with its nice move to the upside this year stands at around $2.2 billion. It's been sort of stuck range bound outside of today's move higher, though, pushing it above its 50 and 200 simple day moving averages.
Yeah, really impressive performance thus far, as you talked about. Certainly one to keep our eyes on here. But, you know, Jenny, as we kind of narrow these down, we got a retail-heavy week that we're just getting through. And we basically go to week 2 of retail-heavy earnings. I'm excited to talk more about Macy's and Lowe's ahead of these reports.
Actually.
And, of course, with retail reports, we do get names like Splunk, NVIDIA. We do have some tech names, but I just get excited about all things retail. So we'll be moving forward with our 2F votes, those being the names that still have earnings, of course, next week, next Tuesday before the market opens. Both Lowe's as well as Macy's. We'll be diving into some technicals as well as some example trades. Stick around. Next Gen Investing. We'll be right back.
Okay, I added some. Me too. GNI. Zax gave Janus a $6 valuation. This is the way. When did that come out? Janus spinoff could lead to greater growth. Great. Oh, unless we're seeing this larger channel. No. This was a double top. But this is another area of support. That one that I had drawn somewhere around here. Get rid of that junk. The channel that broke us out of the upward channel. Bounced off the 50 moving average.
Rick Ducat. So Rick, first of all, thank you for joining us on this Friday. This name has been somewhat lackluster if you followed Macy's for the better part of the last several years.
They said SiriusXM is a buy.
It's definitely been struggling since most of this whole 2023 calendar year here. We can see now that Macy's is down about 39.5% from its yearly intraday highs. And it's been kind of a mixed picture for the trend really recently, because we've seen a longer-term downtrend that culminated with the yearly lows near 1280. That was broken, and we had a very modest uptrend from that point. We had a nice move up from earnings, but didn't get a ton of follow-through after the initial surge upward. So
SPY might not make a big move today, being that it's OPEX.
Then it's transitioned back
might just
to
find
a
safety at
downtrend
VWAP
once
and
more here.
chop the rest of the day once we get there.
Has been broken. And now we're
Hopeful
trading
for a full
below
inverse
all three
cup,
of our
but
moving averages are 21, 63, and 252-day exponential moving averages there in yellow, orange, and
building
purple,
some of this right
respectively.
shoulder now.
And we can see that in addition to having closed below all three of these moving averages, the moving averages themselves are all trending downward. The faster ones are outpacing the slower ones, so it seems like the
Nice,
downtrend
Poison. Yeah, sounds
is
good, man.
still in effect, really, despite this
Those are all growth, though.
couple of
I look
month
for some
lapse we had
value,
that
some
seems
divvy
to be
stocks.
fading now. So
And all of
looking at
those you're not going to
momentum
buy
next,
into
the
for
RSI,
probably
down
a
there at the
while,
bottom
at
of the
least
screen,
6 months or
also
so.
tilted bearish, and it's been increasing with the downtrend. I guess you could say the best
Throw
thing
some dividend stocks in there.
say, rather, is that we haven't hit that over
Some IRM, maybe
that
AbbVie.
threshold 30. So be on
Those
the
are my
lookout
favorite
to see if we break through
two divvies.
this
But you gotta
level
wait
that
because
we're
those.
at right about now,
Let's
around
see, those aren't at
15,
very good levels
and the
either.
reason I highlight 15 is because that's about where we
Verizon,
had our
AT&T,
previous
maybe not
lows,
AT&T.
from June or so. So if
I
we
don't know.
break
AT&T
through
is
that
pretty
15
good, but
level and we start to hit the oversold level on
maybe
the
not
RSI,
anymore.
it could be kind of a bad sign.
HE bouncing off of
for the
UOP.
bulls in
HE might be
general.
a good one, honestly.
So 15 is
Good
the
dividend
support
stock.
area to watch. To the
IEP
upside,
might also be another
we've
good
got
one.
some resistance at the
One's at
21-day
10.8% yield
exponential
now.
moving average near about
Not sure if they're going to hold
1570.
that.
Then we've got our 63-day exponential moving average. Then our volume profile point of control, all in kind of rapid succession there. Everything's between about 1570 to 1620. So that would be a resistance zone to watch. So 15 and 16 would be, let's just
Kitty, you're still just going on about Siri.
So relatively small range here in Macy's. I know
Or
they
Sirius.
have
That's Siri.
smaller stock price, relatively speaking, to some of the other names we
Sirius.
cover. But watching 15
You
to
almost
the
had me
downside,
there.
watching 16 to the upside. We're trading just below around 15.20 right now, even with this nice 1% move higher today. So really tight range into earnings now here. So Alex, walk us through what you're thinking for an example trade, leaning into a more neutral mindset here. Disappointing year for Macy's, disappointing last several years, and underperforming a lot of the most comparable names, I'd say like a Nordstrom or a Kohl's, which are both higher on the year.
And within a space like retail, oftentimes the winners are doing so at the kind of loss of another. So not to say that Macy's is a loser in this space or a winner. It's just one other company's success doesn't necessarily mean one of its competitors is doing well also. And so one thing to consider as we kind of go into this last part of earnings for this particular season is that we've really watched implied volatility get up off the mat. It's been steadily moving higher for the better part of the last 2.5, 3 weeks. And we're now actually looking at IV percentiles for some of these names that are getting
Doing a lot of analysis on a stock that you hate.
Looking at Macy's in particular,
you looking for
it was in the 67th IV percentile. And this is never.
I know what you mean.
Yes or a
when I
no
heard,
type of a situation.
we started hearing about that series squeeze like whatever a month ago. I was like, that's still around.
Volatility within their strategy, and that's what we've done here.
Yeah, when we started hearing about this thing rallying,
really is selling
I believe it's still around, and they still pay a divvy.
Wings. And so what we've done in
probably a great long-term stock.
Selling that 15 straddle, leading it marginally to the downside, and then buying $2.50 wide wings. We're able to collect $1.50 on this.
You think about it, people that aren't playing music off their phone in their car, Siri's the next best thing. Better than local channels, right?
Is our break-even range. We can potentially.
And you have all the talk shows on there. There's a demand for that for sure.
13.5 and 16.5 by next Friday.
You got the comedy channels. You've got like talk shows.
Best case scenario is the risk profile.
No ads or hardly any ads.
Right at 15. And so you can see that there. That's where this
the
peaks
best
out
form
in the
of
credit receipt
over-the-air radio we have right now.
Profit. So $150 is the most that this one can make, not accounting for transaction fees that could be associated with the trade. Break evens we mentioned 13.5, 16.5, and then to find the risk, there is only $2.50 wide between either the call or the put side between the long and the short strikes. You can only lose in one direction on this, and so as a result, you take that $2.50 wide spread, net out the $1.50, and you're left with $1 or $100 in risk in either direction. A neutral strategy, selling implied volatility into earnings next week.
Okay, now to shift gears, but not too far, because Lowe's also has earnings on the same day, Tuesday, before the market opens. Lowe's here is still up around 10% year to date, so outperforming a name like Macy's, of course, has fallen about 2% this week. We did see some, I'd say, mixed results from Home Depot, but they've since erased any of that strength. Also, Home Depot is down about 1% this week. But Rick, walk us through what you're seeing with Lowe's here, because I would say it's not exactly like we're pricing in a ton of optimism out of this report just based on the sentiment we got from Home Depot already.
Yeah, and the chart isn't looking super optimistic lately either for the bulls. We've seen that we had a nice lift after the last earnings event that culminated in the yearly highs. Those came in right around the level of 237 or so. But since we hit those highs, that was the peak. We're down about 7.7% from that point, pretty much straight down in recent weeks. We've crossed below our 21 and 63-day exponential moving averages in yellow and orange there. And we can see as well that the moving averages themselves, once again, they're trending lower. The long-term moving average, our purple 252-day EMA, still is trending upward, albeit a little bit more mildly than it was before. I drew a channel on this chart to project where we might find some potential support. I drew the downtrend going across the yearly highs and then across our next peak, and then just copied it and put it across the lows. So that could be a way to look for some potential support if price continues to fall. This is something that you can use. It's subjective. Remember, it's not a guarantee that price is going to stop there, of course, but this is a way you can potentially use it to make an educated guess about where you might expect to find some support. And another place that you might look for some support would be that 215 mark, that green dashed line. Price topped out there frequently. We did have some excursions above it to the upside, but a close above that level was not very common during the months between about November and March. So that would be the kind of thing you'd want to look for. You can also see that it was a bit of a congestion area back in the May-June timeframe too as well. So 215 to the downside could be one point to watch going forward if things continue to falter a little bit here. A little bit of bullish divergence on the RSI though. So the momentum picture is showing a little bit of strength there. We're seeing that price made new closing lows. RSI was actually trending upward during the same time frame here. So that could be a sign that there's some steam building up in this name. It's something that you should keep an eye on. Watch to see if price breaks above resistance. That would be the first step in establishing some kind of new shorter term uptrend here. We can see as well that looking for our support and resistance
There's VWAP.
these levels, 215 to the downside, then our 252-day exponential.
See if this
moving
channel
average
will
comes in
continue. I mean,
around
it's a pretty aggressive channel.
209.77 level. So let's call it about 210. That's roughly about where our
VWAP
lower trend line comes into
Wash
play
is kind
as
of interesting.
well right now. So that could be one area to watch further to the downside. To the upside, 221 is about where we've got our orange 63-day exponential moving average. So that could be another area to watch as well.
So 215 to the downside, we'll be watching 221 to the upside, which does still put us around $16 below the 52-week high, which is around 237 here, which we've fallen, I mean, about at this point 8% off of that, given just some of the recent selling we've seen in low shares. But we will leave it there. Appreciate the technical breakdown, as always, Rick Ducat, our chart master. So now we're trading this name here, Alex. Walk us through, again, another more neutral leading strategy. This name, not necessarily the most volatile. It doesn't necessarily see, a ton of volume on a day-to-day basis. But, of course, with an earnings event, prepare for any move in any sort of direction.
Yeah, and I'm looking at it in real time. Not quite as much implied volatility on either the percentile or just outright implied volatility, but it has crept up. It's in the 36th IV percentile, and some of the reason for this, as we talked about, is the fact that we've already heard from Home Depot and Lowe's is just typically a little bit less volatile post-earnings as a result of that. But we're looking at a comparable strategy to what we looked at in
that inverse
Macy's.
cup, it looks like.
If you took out the Macy's strategy, which was an iron
It
butterfly,
didn't flinch at VWAP, which is interesting.
Apart, you're left with an iron condor. And so we're looking at selling an iron condor here, centered around the 207.5,
Another support area.
foot vertical, and the 230, 235 call vertical.
Sell another one.
We're able to collect $1.25 credit for this. Our break evens then would be 206.25 and 231.25 to the upside. Total risk on this trade would be 375 on a max profit potential of 125, not accounting for transaction fees. But again, if you imagine that risk profile for the last strategy that came to a point at our short strike of 15, a profit window becomes a lot larger. And so now in this particular strategy, we can make $125 if this stock stays between our short strikes and expiration. These options expire worthless. That's a window between 207.5 on the downside and 230 up on the upside with those break evens, again, as listed on the screen, 206.25, 231.25 to the upside and to the downside. Total risk 375, max profit 125. You're just asking for a limited reaction post earnings in this one. In Lowe's, Jenny, casting a quite wide net around the stock of nearly, exactly $25.
Right, and I think two nice ways to look at more neutral leaning strategies into these earnings events next Tuesday before the market opens, of course. Also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying options
bigger horizontal channel here.
Can add additional risks like unanticipated
very well
exercise
dance
or
around
assignment.
here for a bit.
Now coming up next, it's time for FOMO. So we are looking at Meta Platforms officially now in correction territory with shares down about 15% off their peak here. We'll be discussing more why it doesn't seem like the street seems to care, though, with some more bullish activity today coming up next.
That channel.
Many option traders.
Bounce. I might reload here at some point. Up 12.5%. That ain't bad. The dividends to pressure the shorts, but they've been doing a dividend. That's what I'm saying. Been doing a dividend for years. Forever. Actually, look at the smallest bandwidth and sound worse than AM radio. Then short it, kitty. Short it till it's at 0. That's true. You do kind of need. I mean, you don't have to be like a clear day out, but you can't be under a bridge. That's the same thing with AM. Or like in a tunnel. That bounce on less by. Alright, we're getting rid of all this. Cleaning her up. YouTube in the truck? Are you from the future? How long will series work? Yeah, I know. I mean, at some point, the people that don't know how to use their phones to play music in their car, or yeah. I mean, given old cars don't have Bluetooth, old stereos, but yeah, those eventually will be obsolete. Pandora is a subsidiary of Siri? I didn't know that. I listen to Pandora too. Oh, there you go. Long on Siri. That's like all I listen to is actually Pandora. I never do Spotify. Other stock to look? Yeah, absolutely. I like it. What's the options like on here? You've convinced me. All your bear sentiments really got me wanting to go long. It's not great for theta farming. I have to just look for leaps at a low. Thanks, Kitty. Good looking out, man. I knew you'd have the best stock picks. Based on your name. It's like, this guy, he's gonna have good stock picks. Sure enough, you come in and drop a hammer like Siri. DNS popping off a VWAP. Top breaking below VWAP. $10.50 on Friday? Well, we passed 10.50, David. Let's psych you up. I can't read that. But good morning to you too. Wait, is it still morning? Can't always be morning for you, psych. You didn't say good morning. Yes, you did. You said it in Russian. Can't always be good morning. I know how time changes work. Not always morning somewhere. Alright, see if we get a little more bouncy bounce on this right shoulder. More liquidity grab up here. I think I'm gonna add to these puts. A little risky, I guess, because it is OPEX. Suppose we could just trade in this horizontal channel chop. Both my other puts went into the money pretty deep though, so only one's a little further. 434s, I guess. In case we get that full inverse handle or inverse cup. West Coast, my friend. It's always morning in California. Happy money early, crew. This is the way.
September monthly cycle here. What we're looking at is buying a $10 wide call vertical, the 280, 290 call vertical, and then selling a $5 wide call vertical to reduce that debit down ever so slightly, the 300, 305 call vertical. Whole package here looking to be done for a 350 debit. That would be a break even of 283.50, 350 bucks in risk. But most importantly, any fill price on this strategy constructed this way with buying a $10 wide spread, selling a $5 wide
It's only
spread,
130.
Constructed that way, if it's filled for $5 or less, theoretically you remove the upside risk. Because if all of these options were in the money, if it's done for 5 or less on a net debit, you basically would offset either for a small profit or a break even. In this case, it would offset for $150, the difference between $5 and $350 on this particular case. Looking at it though, it can expand to as much as $650. Reason being is it's a $10 wide spread, and if it falls in that $10 window between $290 and $300, then it would of course be able to capture not only the width of the debit spread, which can expand to as much as a $10 profit net of the $350, which is $650, but that short call vertical doesn't work against you at all. And you can see, though, if it does breach 300 and go through 305, you do stand to give back some of that 650 and potentially see it offset for 150. But risk-defined strategy, break even at 283.5 does need a little bit of an upside move. But in a name like Meta, that was literally where it was this morning. It can move $5, $6 in a day and does so on a regular basis. So something to consider here if you are a little bit bullish in Meta here going forward over the next month.
Averaged in.
Yeah, I mean, the bullish price targets on this name, RBC with $400,
flush
and
through
Blue Cap
VWAP.
with $375.
Finish
The
this
average
inverse
analyst
cup.
price target is $363 a share. That implies like 30% upside from where we're currently trading. I mean, the street just really loves this name. So obviously a nice way to look at an example trade leaning into a more bullish strategy while also, of course, being risk defined because as we know from this week, Meta platforms does tend to move. But that does it for our FOMO segment. Now coming up next, we will look at the recent crash in Bitcoin as we did see some selling that started Thursday
Sound guy.
evening unexpectedly. We don't
We
know
know it's
what's
Friday.
to blame. Could it be SpaceX? I'm thinking not
Jenny's
so
still
much.
talking.
We'll have more on that for us coming up next.
You guys can stick together by liking the stream. Yeah, thank you. 22 likes on the day. Appreciate it, guys. 140. Still got 2 hours and 20 minutes. Spy could still make a huge move like yesterday. I don't think it will. I think it does make a move below the day. I think we're gonna find some support at that 431. Maybe wick below it, but I think that's what we're gonna be bouncing above if that all plays out. So I have this like same vibes as yesterday, where it's like, wow. I guess we were further down the inverse cup and handle road yesterday by this time, weren't we? Yeah, it's right here. We completed the cup at 1:30, so yeah, we're a little bit behind today. Don't do it twice, psych you up. Have you learned nothing? Gosh, Dink and his awful influence. Tells everyone to hit it twice. up below VWAP. Little bounce on KBNT. Not sure that sell-off. AMC's down 2.7. Eyes back down to VWAP. Hawaii's up 12. Drink some water. Morning ritual with coffee. This is the way. Spot. Just kind of chopping around now. I'll have this horizontal channel now that we could trade in. I'll have this resistance on this right shoulder right around 436. See if that holds. Working 615 West Coast. Shut up, psych you up. You didn't do that for me. What a legend. What a legend. You know you can use your phone. I don't know if you have one of those phones. Smartphone things. Like a screen on the whole front. It's glass, usually. I know it's stupid. We carry around in our pockets. Just this piece of glass. But you can thumbs up on those too. I don't know. Had it a little too early, I guess.
With it, against it, all at the same time. It's kind of a lot of noise to sift through.
Absolutely, and I would say it's hard to blame this solely on its earnings due to just the report itself, because we have seen so many geopolitical headwinds come in out of China this week. I mean, even into today's open, we saw shares pretty low, significantly lower on the week and also on the month. Shares are now down almost 30% here month to date, though. So here to tell us more on their second quarter numbers, I'd like to welcome in George Tillis, Senior Markets Correspondent for the network. So, George, walk us through the ongoing story that has been all thing XPeng, because we did get these numbers, as well as, of course, the ongoing concerns mounting in China.
Well, let's talk about the macro concerns first. I think U.S. interest rates rising is putting a lot of pressure on China's economy. And with U.S. raising rates, it's very difficult for China to actually run a different policy and lower rates without their currency becoming destabilized.
Sit at that
and
resistance.
That's putting pressure on Chinese stocks, but also look at what's going on in U.S. markets, particularly technology names,
off a bit.
with the even very profitable companies like Apple down, about 12% or so off the highs that were posted back in late July. So, in a nutshell, we're in a correction, and what we're actually seeing is the players out there, at least in the technology space or in the EV space, companies like XPeng, which have really demonstrated some significant weakness going back a couple of quarters. Also moving a little bit more to the downside today because they're high beta names and quite volatile. And again, they can provide some opportunities to the upside, but also significant movement to the downside. Now, looking at the numbers themselves for XPeng when they reported earnings, the earnings per share posted on an adjusted basis met the estimates at 43 cents. Missed the estimates, came in at negative 43 cents versus a 31-cent loss estimate. Now, that was flat compared to last year, but sales were at $698 million, and that was down about 37% compared to the same quarter last year at $1.010 billion when it comes down to dollars and cents. Now, if you look at the delivery numbers for XPeng, they actually demonstrated this quarter about 23,200 units, and that was down 37% compared to the same quarter last year at 34,200 units. Now, you could make the case that looking at it in isolation, it's a one-quarter issue. But if you go back to last quarter, when we reported on this back in May, the company demonstrated
Needs to
a
find
decline
resistance
of 54%
somewhere here.
unit deliveries
We
last
are
quarter
headed back up
compared
to
to
the
the same
highs.
quarter last year. So what we've seen
Right
here is
around here.
2 consecutive quarters of really bad delivery numbers compared to the same quarter last year. And effectively, if you look at the margin profile for XBEV, looking at gross margins, they were actually negative by 3.9% compared to the last 4-quarter average of 9.1%. So when you have negative gross margins, there's something really bad going on. And I suggest what's happening here is they've been forced to cut prices alongside Tesla and some of the other competitors out there, while at the same time, they're just not scalable. And that's essentially a situation where you have lower prices, but also lower deliveries. And those are 2 major variables in any business that are going against at least XBEV or any business altogether.
George, as I kind of try to make sense of, I guess, what you're saying, is this sort of a situation where company-specific struggles are met with a macro backdrop that is not favorable,
Yep.
making it quite difficult for them to kind of get beyond their own struggles? All the while, you have a name like Tesla that kind of, I guess, ran hot through a really favorable economic backdrop over the last 15 years. That's an alternative that you can go to right now as an investment.
That's correct. Look, the macro backdrop is not helping XBEV, which is already struggling. I think we talked about this also last quarter when we reported on this company's earnings. The best of breed, just look at the financials, look at the growth, look at the margin profile. All of it lines up for Li Auto if you're interested in the better of the breed of Li, NIO, or XBEV. All the financials make sense. They've been growing their sales and deliveries. And that's why the stock itself, if you look at it on a year basis or 52 weeks, is up higher relative to XBEV, NIO, and even Tesla. And so I think that speaks to the financial prowess of that company, and they're actually doing a good job when it comes down to executing their business model. So Tesla, if you look at what's happening, they're the culprit for price wars, but they can afford to do so because as they cut prices, they're increasing volume of sales. XBEV is forced to cut prices, is not increasing volume of sales, it's actually declining. And that's going against them. And then you add on the macro backdrops, the pressure that's on all equities right now, particularly the technology areas, and then you trickle down to the ones that are struggling, like XBEV, and you're going to see sort of an outsized move to the downside. Now, not all is bad. If you look at next quarter, they, for some reason, and I can't say exactly why, are estimated 40,000 unit deliveries. So it looks like maybe the last 2 quarters were really bad. They're having production problems. It looks like, at least based on the guidance for next quarter, that things are resuming to the better. While at the same time, the company does have about a $3.5 billion cash cushion, but they're still burning about $1.5 billion a year in cash. So not all bad. I've seen worse, but I've also seen better. And I think that's something to keep in mind if you're looking at buying XBEV.
Yeah, and George, I think a really good breakdown, and I think important to differentiate, was it a terrible earnings event? No, of course not. There were several other catalysts that were weighing on XPeng even into today's open. But we will leave it there. Appreciate all of the thoughts. George Tillis, Senior Markets Correspondent for the network. Thank you for watching Next Gen Investing. For Alex and myself, we will be back Monday with a brand new look on the Schwab Network. Make sure to tune in starting at 8 a.m. Eastern Time with futures. Have a great weekend to everyone. Coming up next, we have the watch list with Nicole Petalides.
at $80.86 the barrel. For some of the biggest stories in the markets, we welcome in Kevin Hanks, co-host of Fast Market. We're watching Tesla, 6th straight decline maybe here. Into correction territory. Tell us about that.
You know, Nicole, when you look at Tesla, which is one, frankly, of the Magnificent Seven that we call them, these names have been heavy. And new disclosures today about their Bitcoin investments out of SpaceX and Tesla have the stock at least heavy again in a day where the market is actually trying to make a nice comeback here, significantly off the lows of the day. Now, you know, the NASDAQ is the weakest of the four major indices, Nicole, and looking at Tesla, it's one of those names. I've got Amazon, I've got Apple up fractionally on the day, but the rest of them are all soft, Nicole. These are the stocks that led the NASDAQ higher. These are the names that are now under pressure. But, Nicole, we've been pounding the drum all week on China weakness and what's going on there and the weakness in our markets. But the difference today is the 10-year yield. Everyone should be careful of where the 10-year yield is and where these markets are settling for the end of the day and end of the week. So I've got 43.76 on the S&P 500. That's a 5% correction from where we were. If it can hold at or near that level, then maybe, Nicole, maybe this is just a technical drift on the downside here that can be bought, because what's changed between now and the rest of the week, our yields are lower today, Nicole, to start to finish the week. But still an up week for yields, still a down week for stocks.
Yeah, and I was just checking on Apple, for example, 1 month down 9.6%. I mean, no one wants to see the sell-off. They just can't, you know, it hurts them. They can't handle it. And even if something's run up, it still always hurts when it goes down. I mean, that's why you always have a diversified portfolio and hedge some things. 1 month Tesla's down 18%. I mean, that's a big one. Tell us a little bit, you've been watching some of the China stocks. There's so many stories swirling around when it comes to what's going on with China. But of course, China's Evergrande Group filing
back into the chop.
bankruptcy, basically looking
It's still just dancing on that resistance. Hasn't
tell us about some of the things
hasn't broken through, but it hasn't really shown how much it's rejecting it.
Monday morning, we've been talking about the news cycle out of China and how the Chinese government and the Chinese economy continues
coming back up above VWAP.
Efforts by the Chinese government to prop up the economy.
There we go. Let's see a little rejection here.
Both in travel, everything they can do to try to keep this economy moving forward. But you mentioned Evergrande property, a massive property owner in China declared for Chapter 15 bankruptcy. You know, the Hang Seng closed down 2%. That was the start of the weakness of the European and U.S. markets, was weakness in China. And that may not be halting anytime soon, Nicole. So U.S. markets trying to make a recovery here based off some technical levels. But, boy, a heavy, poor performance out of China is weighing on U.S. stocks, Nicole.
Yeah, without a doubt, because we had that other company last week where they were talking about that country one, and now you're seeing Soho Properties, another one there, that saw its profits drop more than 90% in the first half of 2023. It's a really tough time. They're faced with a lot of debt, coupled with a China economy that is slowing. It's just not a good mix. Kevin Hanks, thank you. Always love seeing you, Kevin Hanks. Thank you. All right, let's get the bigger picture. Michael Green's with us, portfolio manager, chief strategist at Simplify Asset Management. Thank you for being with us. So we just talked about China, and I think that's part of the story here. I mean, the higher yields often will pressure stocks, but having China not reopening and being strong and participating and really lagging and being a worry part of the market, right?
Oh, I think that's absolutely true. I've actually been arguing the entire year that this narrative of China reopening was almost a political impossibility. You can't shut your economy down for 2 years, try to explain to your population that you've done everything better than the rest of the world, and then allow them to open up and travel freely to the rest of the world to be true. This, among other things, is putting a lid on China. The primary issue that China faces is with a declining local population.
Just chopping, not giving us that
very
clean
difficult
Inverse
for
Cup
its aggregate
today.
demand to rise significantly to offset the
Big,
weakness
should
that
have taken more
exists in the
profits.
rest of the world no longer wanting
Averaged
to,
in too
wanting to
early.
reduce their exposure to China. So paradoxically, China
Still
needs
a chance,
to
at least to move back
outsource
to
more and
VWAP.
more of its aggregate demand at the exact same time that everybody is saying, no, we've had quite enough of that.
That's a resistance I didn't want it to break.
Right, understood. I was just checking JD.com, which was a name that reported this week, and people liked some of the earnings and some of the numbers they saw, but it was down, and that is because of this, Asian tide, and it's a story there. That's where it's tied, and year to date it's down 40%, and that's the tough part. Tell me a little bit about what you're seeing in our markets here at home.
Well, I think your last guest actually hit on the really critical component, which is much of what we've seen in the last couple of weeks has been about a re-acceleration of yields higher, whether that's a function of China or other Asian currencies, other Asian nations being forced to start to take intervention efforts to protect their own currencies as
Top
the
of the
US
channel here,
dollar
maybe.
is strengthened against them. It's very difficult to tie things in directly that fashion, but we have unquestionably seen U.S. 10-year rates rise significantly, and actually, if you can bring it up, even more aggressive has actually been the move in things like 30-year real rates, what's tied to the tips, for example. Those have all risen significantly. The increase in volatility has made it very hard for professional money managers to continue to hold their exposure to those positions. What's called the volatility has expanded, or the VAR models have actually made them riskier assets to hold. That tends to force a natural de-risking, and that certainly seems what we've seen as an element of effectively a blow-off top in that, that real yield at the 30-year point. Thank you. I think you just pulled it up. When you look at these types of metrics, they would suggest that the world has changed so radically just over the last couple of months that the investment opportunities have exploded. And candidly, we don't see that. What we actually are seeing is signs of rising stress, rising weakness. China would be a good example of this. And it's actually setting up the stage for that next cycle, right, where we begin to recognize that the Fed is probably over-tightened, and we need to now begin to respond to the weakness that's emerging in the economy, particularly in the United States. But that's a narrative that's very tough to sell with the NASDAQ up 35% for the year. And so we've got some backfilling to do, would be my suggestion. Eventually we'll get there.
Yeah. Well, it's the buy the dips versus sell the rallies mentality. And at this point, would you say we're more in the sell the rallies? And when would that change? Would it be after the Fed meeting in September?
Well, I think that's going to be a really critical component of it. If we actually look at the very short-term structure of the volatility surface, it suggests that there's actually been a fair amount of de-risking and hedging directly tied to the end of this month. You can almost dismissively treat that as people saying, well, I want to make sure I'm hedged and protected in my portfolio at least until I come back from the Hamptons. I think there's some of that, and I think then we'll have to see as the markets re-engage and liquidity returns post Labor Day in the United States, what things actually look like. But if we see more indications of this type of weakness, that makes it easier for the Federal Reserve to pause. And ironically, that actually creates its own narrative of bullishness. So I kind of get the sense that we've got, one more round in this dance, one more song to play before the game is actually over and we begin to deal with the ramifications of an unprecedented hiking cycle that has exposed tremendous vulnerabilities within the U.S. commercial real estate, within the residential real estate markets, increasingly within levered corporates themselves. The U.S. banking system is under stress. It's like it actually is a pretty ugly picture when you look underneath the surface. And the only thing that's keeping everyone from recognizing that, at least in my view, has been the underlying characteristics of a relatively strong employment story and the concomitant strength that has existed in kind of those leading 7 stocks within the U.S. equity markets.
So at this point now, what do you tell folks to do with their money?
Well, I have been advising this for too long, and so I want to be very cautious in terms of suggesting that there's any certainty on this. But I would argue that the gift that we're being given at the front of the curve, where the Fed has, in my view, very clearly over-tightened, is offering people an extraordinary return on cash on a short-term basis in which they can evaluate all these concerns and issues as we look forward into next year. I think it becomes harder and harder to justify chasing the market at this point. When you're being given that type of opportunity, when you look at the underlying inflation metrics that are being produced by the Federal Reserve's various regional branches, they suggest that the underlying inflation gauges are now below 2%. That means you're receiving an extraordinary real yield, which again goes back to this 30-year tips chart that I tried to highlight for you. It seems to me that you're being given an opportunity to actually take advantage of what I think is an error from the Federal Reserve. So buy that front end, put your money into a 3-month CD or into 3-month T-bills, take advantage of the yield that you're getting it, and then evaluate where you want to put that cash as we get later into the year or into 2024.
And just quickly, you know, PIMCO is saying that we're seeing the highs for yields. I mean, you were noting the 10-year also. Is this it, or you think we go? Where do you think we go quickly?
I mean, I think this is it, but again, I've been early on this. I would highlight things like I actually think it's more interesting in the real yield space. I think that 30-year tip that I've mentioned a couple of times, that's moved from negative 50 basis points. In other words, you were expected to have negative real yields 30 years off into the future only 18 months ago. Today, that number is, 2.5% or 2+%. That 250 basis point move is that's an extraordinary move in economic terms. Just to put that in perspective, the move we saw in the global financial crisis with the tightening of financial conditions, which everyone assures us have not actually happened, the real yield move there was only about 150 basis points. We've dwarfed that in this move. And I just think that we're actually looking at a situation where that's actually a really attractive piece of paper, particularly if you are concerned about things like inflation reemerging. This is giving you an opportunity to lock the U.S. government into paying you a real yield that looks pretty attractive to me.
Michael Green, Simplify Asset Management. Thank you so much.
Thank
All
you.
right. Later this hour, the CEO of CECO Environmental joining us to talk about the company's recent success and improved full-year outlook. We'll talk about that and our closer look at the healthcare industry after Blue Shield of California pivoting away from CVS Health. And our panel digs into Applied Materials earnings and whether it can continue its strong results. Up next, we're putting Edwards Life Sciences and NextEra Energy into focus for you. Stay with us.
When traders tell us how to make Thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim Trading from TD Ameritrade.
Let's walk through charts, one of the most commonly used features on Thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to Thinkorswim, head to the Education Center on tdameritrade.com.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network. Welcome back to The Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Want to take a look at some more movers in the market for you right now. And shares of Farfetch have fallen to an all-time low after it reported an adjusted loss in its second quarter and issued guidance that was below estimates. So this is the luxury fashion market. It's a luxury fashion platform. And the fact that it's down more than 85% from a year ago really starts to put into question the luxury shoppers. What's going on here, right? So that's an ongoing story. Keysight Technologies, the biggest laggard in the S&P 500 today, after issuing weak guidance. That prompted a wave of analysts to lower their targets for the test equipment manufacturer, and shares have slumped to 52-week lows on the reduced outlook. The company's CEO has confidence in long-term growth despite near-term macro headwinds. And news that activist fund Starboard Value, easy for me to say, bought a 10% stake in Bloomin' Brands and shares the company behind the names like Outback Steakhouse and Carrabba's Sizzling. Starboard is now one of the top 5 stakeholders for Bloomin' Brands, which is now up around 35% year to date. Ross Store shares, those are headed to the highest close that we've seen since January. This is a bargain segment. It's been doing well, showing continued strength. Company topped expectations for the second quarter and boosted its guidance, citing consumer demand for off-price offerings. And checking out Bitcoin, which this week is down 12%. And there are reports there was a mini flash crash last night. In the meantime, it's at 26,040. We'll be talking more about this later in the show. All right, let's get to some more names for you to follow.
Come on,
Tony
Spy.
Zavagala is with us. Glad
Break
you
out
are
of this
with
channel
us,
now.
Tony. Good to see you this afternoon. I know you have a couple of good names to pick here, but just give us your big picture first on the market.
Yeah, thanks for having me on again today, Nicole. So, all right, so to start 2023, a recession by the end of the year was consensus, and never in history has anyone ever been on the same page, you know, where every analyst was on the same page trying to predict such a big event. So I'd imagine that most portfolio managers missed out on a chunk of the upside. And today it's becoming more difficult to predict a recession because jobs are plentiful, consumers strong, inflation's getting better. But on the other hand, you know, there's black clouds out there that they're just hard to ignore, because we got consumer debt's ballooning, high interest rates, the Fed's trying to orchestrate a soft landing. So, you know, at this point, you know, I'm trying to be selectively optimistic. My team has been trimming profits over the last few months. My team's constantly trying to pull together macro, fundamental, and technical analysis for investment opportunities. And basically, we're looking for stocks that have been overlooked and haven't really participated in this year's rally.
What do you think? I mean, the bond story is sort of driving markets too, because yesterday the 10-year yield settled at the highest levels since 2007, right? It's pulled back from that 4.3 level. But, you know, in the long end, we were just talking about the long end and the changes that we've been seeing there. What do you think the bonds are telling us? As investors, what should be our takeaway?
You know what? The bond market is telling us that, you know, there's a looming recession. It's just, when is it going to happen? And, you know, I even actually have some clients asking me like, hey, is this, you know, is the market getting kind of, you know, high right now? Should we transition to more T-bills or CDs or money markets because they're yielding 5%? And, you know, I try and taper the expectations and say, hey, you know, in 2022, you know, clients lost money. And going into 2023, and the headline, you know, the headline was there was going to be a recession. And if everyone would have piled in a 3.5% T-bill in January, look what they would have missed out on. So, you know, the bond market is definitely a great alternative when it comes to an investment class. And what it's saying about the future for the stock market is that, you know, I think that there's a recession coming, but it's not here yet.
Okay. That being said, you have a couple of names for us, and I guess you think they may be somewhat recession-proof, or else you wouldn't have brought them today. I'll start with NextEra Energy, for example.
Yeah, NextEra Energy. So hear me out. Yeah, I'm sure no one wants to sit here and hear about boring utility companies right now, especially when you can go and invest in exciting
GNS popping
AI,
up there.
mega tech. But this is what I would refer to
Above that
as
resistance.
a temporary core holding right now. And why is that?
25%,
Is because
24.25.
my team has noticed that this stock over the last several years trades in a range between $70 and $90. Well, today the stock is trading below $70. And at the end of the day, NextEra is just a best-in-class utility company. And,
Making an engulfing daily
growing
candle there
their
on GNS
renewable
also.
Energy, business
Yeah, I like this
revenues.
breakout.
So I feel like this is a very low-risk play in uncertain market right now.
That's looking good.
I see. Okay, so this should be a core holding, but more even for the long term. What about Edwards Life Sciences? What do you think of that one?
Yeah, another company that was on my team's radar, and this stock sold off nearly 20% after earnings a few weeks ago, which now we're looking at it as a buying opportunity because they're the #1 player in medical devices, specifically heart valve replacements. And actually, EW and Medtronic account for
GNS can hold above this trend line and make that engulfing candle on the daily. It's going to look good for.
But most of the medical
next
device
week.
stocks really haven't been trading as such. You know, Edwards Life Science right now, like they've had 2 good quarters of top line momentum, and their revenues are back to pre-COVID levels, and hospital staffing headwinds are easing. So, and also, another thing that they mentioned in their earnings call is that with their heart valve technology, they're expecting revenues to double from $5 billion to $10 billion in the next 5 years. So I don't know why they're down 20% because they beat on the top and bottom line, but I guess it just wasn't enough. But we like it here because it sold off roughly 20%.
I see. All right. And how about those Magnificent Seven? I mean, I was just looking at some of the names that had been beaten down. A name like Apple, for example, that's down 10%, and you know, Tesla's down almost 20%. And I think Meta was in there too as a big mover off the recent highs. So, I mean, would those kinds of names be of interest to you now that they've pulled back in the way they have?
Yeah, I mean, I think they are a good buy because you know that they're almost, you know, nearly all those companies are recession-proof as well, you know. But next week is the ultimate company, right? We got NVIDIA reporting next week.
Did he say NVIDIA?
They're best in class when it comes to the AI chips, and that's the
smartest
big macro
man on
trend
the
right
TV.
now. But you know, something that I've noticed this summer, I'm a little worried about them reporting next week because I noticed something this summer is that Chat GPT. The usage fell over the summer, and you know that could be because of the seasonal student summer break. But if this is such a world-changing juggernaut technology, should it be experiencing any type of pullback like that? And then, you know, another headwind is that you got China slapping tariffs on the rare earth metals used for these AI chips. So
just bleeding the theta on my contracts.
I think the market's going to really drift on what comes out of NVIDIA next week.
So at this point now, and I think you made great points on NVIDIA, and thank you for that because that's a good preview.
Raz down 6.5.
Also, I just wanted to ask you the big picture because I think you're more likely to be a little more optimistic, right? I mean, inflation is sort of coming down, the consumer is still relatively strong. Are you more leaning towards the optimistic side of this?
You know what? I think the market is going to trade sideways for the next, I think for the rest of the year. Because we do have some headwinds out there, but we do have some positives. And I think next week, you know, the Fed's report.
I don't know if I can take profits on my top or not.
And I'm not expecting any earth-shattering event, but, you know,
I think I'm not able to sell it today.
I'm going to look at the data. Well, jobs are plentiful, consumer spending,
just hold it.
Inflation's not 2%.
Tomorrow pre-market,
so he's
maybe.
got this tough job of, you know, orchestrating future hikes, orchestrating a pause, and then eventually a pivot.
Wicks.
And I think it's he's
Big
got
max
to be
pan on
careful.
SPY
He
is
can't
like
pivot too
435.
early, or he'll reaccelerate inflation. So I'm not expecting a pivot anytime soon. But, you know, I would have to say that, I mean, actually, next time we report inflation, they're talking about a reacceleration to 4% on inflation. So I would expect another hike
just back
this year.
below there.
And also, I think we need to get used to that phrase,
Testing
stay,
it.
you know, higher for longer. So there's
Next
not going to be a
pain's
pivot, and if anything, a hike
435.
or, again, higher for longer.
Yeah,
and that,
look, I mean,
and those
unemployment,
headwinds of interest rates, the headwind of interest rates right now is going to suffocate the consumer, but everyone has a job. So I would have to say that, you know, going sideways to slightly up the rest of this year, because we've had a great year, but it's also driven by, you know, 6, 7, 8 stocks right now.
Right. Look, you know, jobless rates moved up in 15 states in July. That was up from 10 in June. And you have Wells Fargo, for example, talking about the unemployment rate and that being likely to rise, particularly if we have a higher rate environment from the Fed, which may or may not keep raising rates. But to your point, like
We carry on the ground before we drop from the sky.
Tony
That's
Zabigala,
deep.
thank you. It's great to see you. Strategic Wealth Partners. Thank you, Tony.
Thank you.
Coming up next, we're welcoming the CEO of Seco Environmental to talk about the intersection of the environment and industry, what we need to know. The company, meantime, raised its full-year outlook. Going to learn more next.
GNS is tempting. Hour and a half to go. Yep. Yep, little inverse head and shoulders there. The point of that though is you need the breakout of this resistance, which it's done now. Because you can get inverse head and shoulders still in a downward channel. Like you had here, you had head, shoulder, shoulder, ripped up, but then rejected that resistance, so good to see if this shoulder and this neckline can hold above that breakout. Spine's moving up. I'm out of my puts. Wow. That's the thing. Some days you get big continuations like yesterday, and you're like, why did I close so early? Other days you don't get it at all and you end up in the chop. It was a great trade though. Had the double top. Just didn't close enough down here. We are doing the handle dance. The longer time frame, we're kind of back in this, getting back into this channel too. Well, not really, actually, not yet. Not as bullish. There you go, SPY. Testing the high of the day. See if we get a breakout here. That level that broke back there where I closed my puts was the level. BTOO up at the high, 20% up. UNS 23%. Consolidated above that breakout. Very good. Very good. Grab some G. Okay, picked up some GNS. Might get more if it comes back to VWAP before end of day, especially if it's above this level here. I mean, it's close to it. There's margin for error there, so. Risk to reward on this might not be too great. We'll see. I'm thinking retest of the highs, potentially. If that breaks, I mean, of course, there's gaps up there in $2 range and stuff. Breaking out there. There we go. All right. Got a handle to form. Minutes to power hour. Did we get a little short squeeze going on the SPY in the day?
California's decision pivoting away from CVS Healthcare market, that sparked a sell-off. What did it say to you? Did you expect something like this? How should people interpret this?
Yeah, well, look, I think there's a very simple way to interpret this, and that is to focus on the consumer. The consumer is king, and you know, if you look at the two companies involved here, it's Amazon, it's Mark Cuban, and so these are names that we don't associate traditionally with healthcare, and these are names that we associate with the consumer. And I think there's a broader shift that is underway, which will further align the healthcare system toward the interest of the consumer, whether that's health outcomes, whether that's their personal safety, or whether that's their pocketbooks. And I think this move sort of aligns with all three of those things.
Insurance as we know it, what do you think about that? Because normally you would go to the drugstore and you would use your insurance. Do you see that completely changing?
I think it could over time. I mean, I think a lot will change in the healthcare industry, right? I mean, I think you may not go to the drugstore. You may do a lot of things from home. You may be diagnosed at home. You may be delivered at home. And I think that's part of what Amazon is looking to do. So I think there's, we all know healthcare is a slow moving industry, but I also think it's one of those industries that's slow moving until it's not. And I think there's so much pull, whether that's in Washington or whether that's, from entrepreneurs. I think it's no surprise that this is happening out of an Oakland-based system. There's a lot of push from consumer tech and consumer wellness groups to say, how do we align the biggest sector in the economy, the most impactful sector in our country, with consumer rights and consumer welfare?
And the question
and
is,
I think
the sell-off. Yeah.
Go ahead.
I didn't mean to interrupt you, I'm sorry, but I was thinking is whether or not the sell-off that we've seen for CVS, is it as bad as it seems? The pharmacy benefit managers are in focus. You have RBC saying, it's sort of overdone.
Yeah, I think it's overdone. I mean, I think it's a bit of a reaction. I mean, we're in the summer, people sort of end up overreacting sometimes to things. Look, at the end of the day, CVS is still doing a lot of great things, right? They just made a large acquisition for the in-home healthcare space. I mean, they're going to align themselves with trends, but at the end of the day, we can't forget the fact that this was a real revenue center for them. It's probably tied to some of the layoffs they made, last week, and so there's going to have to be an adjustment from all these companies to say, how do we again think more consumer-like? And that sometimes does not mean, in fact, I would say oftentimes does not mean that you just sell people as many drugs as you can. And at as high of a cost as you can, right? I mean, I look at the obesity world right now, and I see everything that I'm reading and seeing and hearing from people like, oh my God, we've got another magic pill and drugs out there, and people are debating the cost structure. And I think you've got to go back to first principles. Who needs drugs broadly, right? And how much should they be paying for drugs? And then are we making sure that it's accessible for the people that need it? And that there's other solutions that
might
are
have a
out there for
divergence
people
here
who
on the
don't need it. So I
RSI.
think this move sort of plays into this broader trend.
It's funny because CVS Health is saying that the loss of Blue Shield does not have an impact on their long-term
435 is max pain.
numbers.
Few ups down here. Might not make its move up.
I know Blue
Might
Shield
find its way
is
back to
not
safety.
United Healthcare or something, but as popular, as widely used. But you know what I mean. I would think it would have some impact.
I like the bearish side of that engulfing candle.
Pills
False
for
breakout
everybody
though.
all the time. That doesn't sound right either. And at this point now, we're going to be getting lists of some of the names of some of the drugs that will come in at a lower price point, right?
Yeah, that's right. And I think, it's about efficient market, right? And so at the end of the day, if you can find things, and you can procure them in a more cost-effective manner, then that needs to be passed on to the consumers.
You missed this call pretty hard.
That list will get, I think, wider and broader. And I think that ultimately creates value for everyone.
Risk management, that would have sucked.
Tell me about Allurion Technologies, of which you are the chairman. Non-drug weight loss
Apron ripping
platform.
still all day, 17%.
As everybody's on Ozempic and Wegovy.
Down and golfing to the upside? Okay.
Yeah, look, it's a company that started out of Harvard Medical School a decade ago. We were the first investors, and we've grown this business to be operating in 60 countries. It's two components. You've got a balloon, which is a completely non-invasive, no endoscopy, no anesthesia. You swallow a pill, fill it up with water. It's a balloon that stays in your stomach and just makes you feel full. There's no biological change. There's no hormones, nothing.
That seems healthy.
And then you
just put balloons in our
with
stomachs
like
since we don't have discipline to not eat too much.
Let me help you
and
change your
exercise and eat
behavior
healthy.
maintain the weight loss. And to me, that's very important. I think any sort
So
of
let's go sit on the couch and
needs
eat
to be
chips.
long-term,
Just a few because we'll be full.
It needs to be safe. And so that's what we do. And we aren't in the U.S. yet, but we're in 60 other countries around the world. And when we look at the future of weight loss, which I think is one of the biggest massive markets that's emerging right now, we think we're the non-drug solution, the non-drug platform. And I think that's going to be actually potentially half of the market.
a pill that sort of enlarges in your stomach and takes up some of your stomach so you feel more full. Makes sense. But then what's it made out of? How long does it stay in your stomach? How much does it cost? Why isn't it approved here in the States? I mean, and then tell us.
Yeah, well, it stays for 4 months. It's made out of very simple polymers that just biodegrade, so there's no risk in terms of it biologically interacting with your system. And why it's not approved in the U.S. is it just takes a longer time, and we're working through that. But we are approved. We're in 5 continents. You can get it in Canada, in the UK, in Australia,
So you expect okay.
Yeah, exactly, and it's really, it works. It works. It's simple. It works, and it does not have any long-term effects.
All right, you'll have to come back on when that's happening. I want to hear more about that because that could be a new balloon topic. No pun intended.
No pun intended.
Krishna Gupta, CEO of Remis Capital and co-chairman of Illyrian Technologies. Great to see you.
Great to be here. Thank you.
Thanks. Still ahead, our panel's ready to discuss Applied Materials after the company's earnings beat the street. We're going to talk about some of the macro factors, watching Applied Materials closely and the influence. All next.
Coming into power hour though, crazy stuff can happen. Different algos switch on, take over, buy on close, sell on close. Market makers. You end up being an OPEX. Flush for Renos. You're flushing to the upside of 438.25. That's a huge. That's a bad toilet. That's a backed up toilet. If it's going up, you should get that replaced. Down a little bit here. See if we can make it back to VWAP. Op is melting. Top war still at VWAP. Happy OPEX day to you. BNS still bull flagging out there. Why hasn't made it to VWAP yet? There's a little flushy flush. See if we can build need a little liquidity over here on this right shoulder. Got a shoulder and a head. That did break through the resistance. Like they do. Would be quick though. Doesn't necessarily have to hang out here. PCG, is this wait, PCG? Oh, PG&E? Earnings? Why do you think it's gonna dump? They're one of the electricity providers for Hawaii, huh? Hawaii. Hurricane Hillary? Interesting. You think it's gonna do damage? That would be very unusual. Let me take a little look-see at this hurry. Hurry. This is going to be a category 1 by Sunday when it hits Baja. Yeah. Think that's a good exposure to it. This is the main power company there. PG&E. Aliens. Shorting the power company, is that the best exposure, you think? Have the options started pricing in? This says Southern California Edison, and this other search shows PG&E. I think it's already started to price in the hurricane, maybe. This also could have been from Maui too, maybe? I like that. Our hour is upon us. It's coming down. Oh, did they just add a bunch of strikes on PG&E? They did. They added a bunch of half strikes and stuff. Those dirty dogs. Here comes the spy. Do 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 do. Yeah, what's Edison's? CE? Is that the ticker? You've got SDGE? San Diego Gas and Electric? One's EIX. Just Edison. Pretty dope. Oh, they only have monthlies. That's not as fun. Yeah, I don't want to mess with that. About San Diego Gas and all that. SRE. SRE. Is SRE? Sempra. Oh, Sempra Energy. That also just has monthlies. Yeah, I like that other one better. At least it had a cheaper. Big spreads though. Closed one put there. Only got a few this time. Good call, Bubba. I like that. I like that trade. Pretty unusual for California to get hit with a hurricane, so if it would be devastating, I suppose. It's just not prepared at all. Volume on barbecue there end of day. Up 4.8. Above that first trend line, so that's good. Need to see it above a couple more. Like GNS holding up there. We'll see. See if it wants VWAP end of day. I like how you added aliens in there. Aliens are going to bring us energy. I like how they named it Hillary. In, like, the most liberal state. Hillary, wipe us all out. Gave back all my gains today. That's too bad. Overconfident on this drop. Averaged in. That hurt. This was a nice trade. Could have closed more and been happy with it. Actually, if I just closed what I did and then didn't average in, that would have been probably fine. Would have had good realized gains and not given back. Close a little more here. Be a spy. Oh, wind is going to sweep over Sierra Nevadas. Is that what you're trying to say? Wing going to sweet? Yeah, you're gonna get fires, you're gonna get... Maybe you need more than a week. Probably a bunch of... I guess it's summer. No snow. All the human remains will be washed up by the flooding. There's a volume. Can you hear me now? Barbecue up 7%. Almost back to 20 cents. That ain't bad. Another inverse head and shoulder has been built. No, I assumed it wasn't my volume. I don't know. Is it pretty weak? Well, you got OPEX today. That could be messing with stuff. But volume seems pretty typical, I guess, for a power hour. Interesting. Moving up a little bit. Up, moving up a little bit too, above VWAP. Let's get a low of the day flush here. I've got one contract left.
Some of these key groups in the right direction, then maybe we can have a peaceful weekend and try and reset. Also helps that some of the consumer stuff is doing well here, Renita. I mean, we can't underappreciate a company like Ross Stores.
There's 20 cents on barbecue.
Too, a decent message here this
8%.
week that included retail sales.
Ooh, HE ripping up too. 17%.
Some of the consumer stocks.
It has today. In fact, when the market started to turn around today and wake up a little bit, it was the retail stocks that gave it that positive jolt of energy after Ross Stores posted better than expected earnings, raised its outlook as well, and a flurry of analyst price target hikes came as a result of that. Now, people had high hopes in this stock to rise and in the earnings to come in better than expected because of how well TJX performed as well. Consumer spending continued to hold up, but on a whole, budget-conscious consumers are looking for bargains. So you would expect the off-price retailers to do well. Now, Ross Stores also announced that it'll maintain its quarterly dividend yesterday. That was a positive note as well. And looking ahead, of course, they raised their outlook, although Ross Stores acknowledges that the consumer is dealing with moderating inflation and will continue to face persistently higher costs on the necessities. So that will be a thing that they're going to be prudent
back to
about,
VWAP.
although they still
Barbecue
raise their
2049.
outlook. So they're expecting
10.5.
positive, but they won't be too surprised if we see a consumer pullback. Now, TJX also had another beat and raise quarter during the year. They saw more people go for some of those retail items that obviously you can get cheaper at TJX than any place else. Walmart did well as well during the week, had strength in groceries, not so much the discretionary items. Target, the outlier here this week, did not do as well as analysts expect.
To see some of these stocks hanging out at 52-week highs, I feel like really deserves a strong mention. Thanks for taking us through several of them there, because, you know, not just today with Ross at the top, Walmart holding on. It dipped on the earnings, but then it came back. I mean, even Target's numbers that weren't pretty, it managed to hold on to its lows. Is this encouraging, Kevin, or does it tell us that the only thing that really works right now is something discounted and essential and not so much discretionary? Does that tell us a little bit of, you know, kind of a hedged tail to some degree here on the strength of the consumer?
Yeah, the trade down, right, that everyone's talking about
Here we go.
continues to still happen.
Can you hear me now?
Talking about continues to still happen. It looks like, Oliver, the fact
All right,
that
close out of my spy
you
point.
know, Target put up a good
That was
earnings
fun.
per share.
All day trading back
but
and forth.
The guidance was
Up 500
not very
bucks.
Good. The revenue was
Down
not very
$100.
good. Walmart,
And
on
the
the
day
other
up 60
hand,
bucks.
knocked it out of the
1.5%
park,
on
but
the market.
The
On that
valuations
account.
were skewed.
I'll
right?
take it.
Target was beat up and Walmart was overbought. So they corrected ever so slightly, but this is still a really good story
Gotta
for
get the
Walmart.
base hits. Can't swing
Still
for the
not
fences
a
every
great
time.
story for Target. Ross Stores, kind of an underappreciated,
here.
off the radar kind of low
Tough when you have days like
profile
yesterday, though. It
company
really
that
makes
just
me just
continues to execute
always see
and
this.
give you. But you know, it's interesting.
Because this would have
Ross stores
100%
are one
in
of
my
those
account.
companies, not flashy lights, not big, beautiful, flashy buildings. A very conservative approach to giving you their merchandise, and maybe they get
BBQ,
underappreciated
yeah.
because
I mean, today overall was
Ross
pretty
stores,
choppy, honestly.
They
It
keep
wasn't,
their expenses low and they put up
didn't have a lot of
numbers,
direction. Pretty tight range.
Okay. At least we got stocks
You know,
at
on these
highs,
days, if you
know?
can't
You can't
like
say it about
lose
tech
and just
stuff. It's pulled back too
or
much
if you
the last
lose
few weeks.
on
Ross,
these days, just a small
TJ,
amount,
comfortably
that's good.
sitting
As long as you
at,
can just
the highs
survive
of the
until you
year.
have big
So
days like
that's
yesterday
something
that
there
are
to at least maybe
much more
hang
straightforward
our
to trade
discounted hats on.
and
Thanks,
easy to
guys.
trade.
Renita, Kevin,
Very
appreciate
direction oriented, and
analysis of today's action. Let's broaden out
these
the
days you can
conversation
mitigate
to include
losses
the
and
rest of the world.
maybe
Joining us
squeak
from
out small
Sheldon
gains.
Capital Management is
Wait
Derek
for the good
Easwell.
days.
He's the Chief Investment Officer. Derek and I are watching the dollar, how it connects to some of the global themes. So let's maybe take it back to this morning when we were reading articles about China's Evergrande and the potential for real estate blow up. Is that something that should be on the top of our list as both domestic or international investors?
Well, certainly China, the prospects for equity or other returns in China are fairly bleak right now. I mean, all these things we're seeing in their real estate sector are just symptoms of broader issues that this country has. And one among the increasing amount of debt in the country, deflationary forces they're experiencing post-opening
UTLO
up
back at the
from their
highs.
COVID lockdown, and the demographics, which is probably the
Barbecue
biggest
2050
drain on
and
prospects
0.8%.
for Chinese growth. And so, you know, the
Gotta
real
see,
estate
gotta
just
see.
symptoms. There's
See,
a lot
right
of
here,
big issues.
inverse
in
head and
that
shoulder,
part of the
same
world.
deal, even above the resistance.
How do we view that right
and then
now?
whoop,
As
came back down and made another
force
head and shoulder, and then
compared to
continued the
all this
downtrend.
surprising
Right
strength
here,
in the
same deal,
U.S.?
inverse
Do they
head,
offset each
shoulder,
other? Do we
shoulder.
get to lead the way
With the
because we're a
resistance,
little
came back down.
bigger GDP? I mean,
So I made a
how does that
steeper
work?
resistance line
Because
here
here the
because
conversations
the
about
trend
yields
got even
blowing out
steeper.
and the
Well, it's
risk of
broken that,
inflation
but
coming back because the data's been
hasn't broken
so
these. We
surprising.
do still have this inverse
But
head
then
and
they can't
shoulders.
get their act
So
together over there.
want
Do
to see
these
if it hits
forces bounce
resistance
off,
here,
or what's the net result?
or if it builds up some liquidity on
Above
this
and
right
beyond
shoulder
China, there's
and then
a
breaks
lot
it.
of prospects
If
for
it can break that,
some
then it
solid
might be going back
returns in
long on
emerging
barbecue.
markets, even relative to the U.S. I mean, emerging markets
But
really have not gone
I don't know.
anywhere for 10, 12, even
Probably,
close
maybe.
to 15 years. And thus, they're on a relative basis, they're really cheap. But you point out an important point, the dollar. If the dollar is to weaken from here, or continue to weaken from some of those October highs that we saw, we should see emerging market equities do extremely well. The weak dollar was what propelled emerging markets through their last bull market, which was, of course, more than 10 to 15 years ago, but it went on for some 5 years, and emerging markets outperformed developed markets substantially during that time period. So keep an eye on that dollar, because that's the big catalyst for an emerging market move above and beyond China.
What do you think the dollar move here, the strength means in terms of our central bank relative to the world's central banks? The dollar collapsed last month, right when everybody was talking about the Fed's cycle being over, and now it came right back to where it was, basically, in mid-July. What does that mean? What's that telling us?
Well, yeah, the dollar is it sold off after the October highs and has sort of been back and forth for the last 9 to 12 months or so. I think the key is watching those central banks and the extent to which they drive relative interest rates. Obviously, we've got the Fed in the middle of all that, and in general, the take on rates has been we're getting close to the end of the rate hikes overall. Meanwhile, you see overseas, you look over in Europe. Europe is still, they're farther behind us in the rate hike cycle. And probably even more importantly is Japan. And Japan has been holding rates down for many, many years. And yet, both in November and then just recently here in July, the Bank of Japan has expressed the fact that they're willing to start relaxing those forces and we're talking 20 basis points at a time here, but that's a big deal in Japan, letting those interest rates in Japan go up because they're experiencing inflation as well. May not seem like much, but on the margin, there's a lot of U.S. bond buyers in Japan. If some of them stop buying as many bonds in the U.S., expect to see the Japanese yen strengthen and perhaps be the
15 strike
leader
PCG.
of
They're pretty far out of the money. Definitely a lot on those.
How come it hasn't happened in the last couple weeks here when they actually made this move? That, I mean, I was getting alerts on my phone at like midnight when Japan widened out that yield curve control. Bloomberg, everything I subscribed to in the morning, it was all over the headlines. Dollar went up. It's been up. So apparently it was a big deal and maybe a surprise, but how come the dollar's rallying through that?
Well, I think that while there's been a lot of anticipation in the news media of it and every signal that was going on, I think there was some smart money behind the scenes that really knew that this was the month that the Japanese Bank of Japan finally made another announcement that they would relax things. It's been speculated every meeting they've had. Somebody had a good idea that this was the meeting they would say something, and we'll start this whole cycle again where the pundits or the market out there will be thinking they're going to continue to relax these constraints, and then we'll start to see the movement in the dollar ahead of time. So yeah, markets anticipate things like this, maybe a little earlier than it gets to you and me.
Got it. Tell me about the idea behind your guys' strategy right now, as I know your focus in the EM world, EMSQ, X, the fund. What's the big constituency in there right now? Is there any regional bias that's emerged, any sector or theme that's making its way through that strategy?
Sure, we've made a lot of nice returns from the technology sector in emerging markets. A lot of the tech companies in Taiwan, everyone's familiar with Taiwan Semiconductor, been a good stock for a long time. There's some other smaller Taiwanese and Korean companies that have been great. But we're starting to shift more to Latin America. As we see the forces of globalization ease and a lot of developed market companies pulling operations and manufacturing back from China because it's getting expensive, they're concerned about the volatility over there. Particularly U.S. companies, Latin America is a great destination for that. Still inexpensive, but much more politically secure, much closer. And so you're seeing some really solid strength in Mexico and Brazil, as well as some of the other countries. And we've been participating in that as well.
Do you want to see anything in particular on the inflationary front? Derek, last point, are these areas that would enjoy commodity prices rising again? What is that kind of macro?
Might get some GME calls.
That particular subject. Is there a lot of ties into that kind of inflation cyclicality?
Building a handle. I mean,
yeah,
SPY
absolutely.
exposure.
Inflation. Not only would it be at least some steady inflation,
all the
or
stuff
higher
going on
inflation
with
would be good for emerging markets.
Chinese
but
real
also
estate again,
particularly
Evergrande.
for the non-Asian emerging
It is
markets
correlated.
that have a bigger commodity focus. And so if that is the case, if we
These
just
spreads
continue
are
to have
stupid.
inflation, expect to see within emerging markets more performance from Mexico, Brazil, Latin America, South Africa, places like that, and less performance from, say, Korea or Hong Kong or China, which tend to be have more of a technology and manufacturing focus than necessarily a commodity focus at this point of the cycle.
All right. Fun combo, Derek. Thanks for keeping us balanced here. Our attention needs to sometimes get a refresher of what's going on outside the U.S. focus. And I always like the EM talk. Appreciate it. Derek as well, Shelton Capital Management. All right, as I mentioned, EM SQX, the fund. Coming up, let's talk some software, and let's continue the conversation with the CEO at PubMatic after shares got hit on earnings. Revenue over the past year, roughly around flat. We'll talk about the latest here in the plan going forward.
Stop. Gotta hold. Gotta do it. I like that it's more volume than this time. Not as much as this day though. That was 26 million. It's 12 million. Pullback looks similar to this day, maybe even a little more. Weird. Alright, I got some GME calls. Got the 20 Septembers. It also covers earnings too, or it should at least. I'm not sure I'll hold through earnings, but you see a big inverse cup here. Same with the SPY. We might be getting a bounce for an inverse handle next week. That could bring us anywhere 20 and a half, maybe all the way up to even 23. And if the market's squeezy, oftentimes on these downtrends and you get the bounce, it's very short squeezy and volatile and violent and ferocious. Lots of velocity. And GME loves to wake up. Well, used to love to wake up when there was volatility. So we'll see.
If revenues are going to slow, do you feel like there's more you can do on that front, or at this point, where can you find those efficiencies?
Yeah, cost efficiency is something that we're always focused on, and I think actually an environment like this is a great time to really rethink and look at the cost structure and think about how to build a higher margin business for when the economic environment does normalize. So as an example of that, we've lowered our CapEx expenditure this year by about 70% compared to the average over the last couple of years. So
I didn't get IEX, I just got PCG.
35, 38 million range. This year,
I had an order out for it,
10
and
million,
I had one for
in
PCG,
CapEx.
and the
So
PCG
that's
failed, so I
huge
canceled
cash
IEG or
savings.
IEX.
It also means our gross margins will be higher in the future.
Yeah, I guess just being monthlies, but it's maybe smarter to get monthlies with this, especially if we're talking about like flooding, and it could take some time. But the market always front runs everything, so
this year, and so all of these things will
any sort of
set us up for
devastation that's starting to hit.
When the economic environment normalizes. Now, keep in mind, we came into
monthlies
this
would be safer
economic
for sure.
environment as a very profitable and cash-generating company. So
I don't know
this,
which one will have
past year
more
was our
exposure
10th
to it,
consecutive year
honestly.
of positive adjusted EBITDA.
The
We continue to
HE in
generate
Hawaii,
significant cash flow. And in fact,
that was kind of an anomaly because all the energy companies got a little hit there, probably from it. But
just to highlight that we think there's great opportunity.
since this one's being accused of like starting the fire,
exactly where
it's
our mouth is.
just extra
So
bad.
we feel really good about our position. I should also just
Unless
add
if
170
unless if they start
of
accusing
cash
PCG
in
of
the
starting the
bank,
hurricane,
no
probably
debt
won't be a
on our
crazy
balance
sell-off
sheet,
like
so
this.
we go into this with a very healthy cash position.
How do you balance the repurchasing
Bounce on
with the
SPY.
drop in the CapEx? I do feel like there's going to be an investor base that says, hey, do you not have
YouTube channel
somewhere
that the
to
market
better
is using.
invest this money for growth at the moment? Belief in the stock certainly compelling to some investors. Others would argue the other way. They'd say, hey, find somewhere to get a better return than just buying the stock. What do you say?
Barbecue, 12%.
Yeah, absolutely, and I understand that question. So
2075.
we've been very focused on innovating and creating new
Well, it's safe to say it did like that support of 1750. Now, if that's a temporary support or not,
Convert in the,
I think is still yet to be
last couple
seen.
of weeks, which is focused on the fast-growing commerce or retail media opportunity. So your guests, may have followed the headlines. For instance, companies like Uber and Lyft have grown have launched very fast-growing ad-driven models.
Yeah, I don't think
inside of
PCG is
the
going
ridership
anywhere.
Experience.
Or
And so
HE.
we
I
announced
think
Lyft
HE
as
would
a
be
launch
fine.
partner just a couple of weeks ago, alongside
It could be-
TripAdvisor, Wallet, which is a major
It'd be a nice
classified
pickup.
listings company in Europe.
The
So we're
long-term
innovating
divvy.
in the fastest-growing segments of the market. As it relates specifically to CapEx, we use that CapEx to drive impression capacity growth. So that's our ability to process more and more ad impressions, now at over 500 billion ad impressions on a daily basis.
Brad, you're down
So
9%.
One of the ways that we're
Freaking
growing our
suck.
capacity this year is really to lean into optimizing our ad serving infrastructure.
Yeah,
as
problem
opposed
is
to
so
adding
much
new
retail it holds
capacity
us.
through CapEx
That's not a good thing.
expenditure. So we're growing our infrastructure at a record rate this year.
I think individuals
and doing
hold
that really by
over 50% of the
investing
float
and
on RAD.
optimizing a lot of the hardware expenditure that we've
I don't know how that
gone
happened,
through over
but
the last couple of years.
did.
So we see a lot of great growth opportunities
Basically,
ahead of us. And
GME.
we're really positioning ourselves for market share gains when the market environment does normalize.
Right now, what
So
are
I'll go
the
direct register our RAD
key
shares.
variables for that
Big's down
normalization of
6.
the market? Is
Looks
it
like it's
just
bear flagging,
purely
but
economic, where GDP
at a nice
goes up,
support level,
then the
close to it
market
at
goes
least.
up with it, or are there certain things connected to advertising, in particular?
Large point.
Is there too much saturation? Are there too many competitors?
We'll have to do that
Is there
support
something that needs to
yesterday
happen
or
to
today.
thin out the field a little bit, or is it just a
Hopefully we
matter
get
of
a bounce on
looking
this
at
if
the
it comes
economic
up with the
direction
market.
when you talk about some of those
We
macro
get a handle.
imperfections?
Same with run.
We definitely
It's
see
down
that an
2.8.
environment like this creates
Ups up
an opportunity to
3.7 now.
consolidate the ecosystem. So we've seen, for instance, Yahoo earlier this year exit the sell-side
Barbecue
platform
12%,
category.
2075.
So that was a competitive business to us. We've seen a couple of
BPD not bounce back?
other companies, close up shop over the course of the year. So the market is
Another
consolidating.
ticker.
We absolutely
Is that
see
it?
ourselves as a leader in that consolidation process. So the key ingredients for us, while we I think all await across many sectors for the economy to normalize, the key ingredients for us are really to get stickier and deeper with our existing customer base.
Looks
Over
good.
1,750 publishers that we work with globally today, to make sure that we have the data, the integrations, the inventory flowing for
Wasn't
when
this,
the
was it,
economic
in the
environment
90s?
normalizes. And then the second
No, that
key
was much more
ingredient is
recent,
to be
wasn't it?
innovating and launching products in the fastest growing parts of the ecosystem. And so that's CTV
Not sure
with
what that's
our
all from.
Activate launch last quarter, and then Convert focused on retail or commerce media. Those two product areas we think expand our addressable market by roughly $75 billion, which is on top of a pre-existing $50 billion
this was a
TAM.
sell-off right here.
So we're more than doubling our
From it.
TAM, in
Definitely
this
bounce back.
slower economic environment, and we think that's going to pay dividends, when the environment normalizes.
Okay. Rajiv, thanks for the thorough walkthrough of what you see going forward and the explanation of what's been happening so far.
This chart does
We'll
look good
definitely
now.
keep track, and
Especially if we can hold
certainly
above that
the consolidation of the
breakout.
industry also exciting too. So thanks for the heads up.
Thank you.
Absolutely. Rajiv Goel, CEO at Pubmatic, ticker PUBM, holding on to the 52-week lows after taking that earnings hit. When we come back, let's trade some options. 2 bullish trades, 1 bearish. You may not like it, where the fade is.
the heck? Carvana's up 6% today. I picked the most resilient stock to short. Not even AI's held up that well. Or Upstart. The dump on some of these have been so fast, so much faster than the climbs. Look at VTGN, jeez. $13.5% on barbecue, 21 cents. Oh boy. Hit the level where it found buyers. 1750 was a good support on it. Had this line drawn for weeks. It respected it so far. We'll see what happens when we get up towards these resistances. We can hold above them. Still hasn't broken it yet though. Okay.
Some options trades that are interesting we want to get to with Tom White. And the last one, I'm saving the drama for our last one here, Tom, because it might be a little bit of a worrisome sign ahead of next week. Let's do your first bullish trades. You got Kava and Tesla. Let's begin with Kava after the debut earnings. Someone satisfied with what they saw?
Yeah, I think so. The stock's fallen pretty much
16%
about
on barbecue.
24% so far this month.
Get up towards that resistance. Let's see.
It was a pretty good earnings report. Their first one as a public
Monday will
traded
really
company.
be the decider.
EPS beat. I think it was positive 21 cents versus a minus 2 cents expected. They beat soundly on revenue. Also, margins grew. Same-store sales up over 18%. That was a new record for them, even previously when they were still a privately held company. They opened 16 new restaurants. That's not a lot, right? So they've got a good total addressable market as far as growing their footprint as they want to become the Chipotle of the Mediterranean fast food world here. But they've got good margins for this business. They continue to grow. They expect to open about 65, 70 restaurants over the next 12 months. So that footprint is growing. And we did see that pullback post earnings. It's doing okay today. It's up over 1%. We've had some traders coming in there buying some September calls.
2170 up 17.3.
Rebound from this 24% slide that we've seen so far in August. They bought just over 2,000 of the SEP 45 calls. Average debit of about $1.95, so that break even just below $47 a share. Over the next 28 days. It's about 9% above the current share price in here, Oliver. And it's not surprising when you see, a stock like this kind of, ping pong back and forth. This is their first earnings report that they released as a public company. But somebody thinking here over the next month we're going to see some more gains or maybe dig into some of those August losses that we've had.
Okay. So I guess unfazed by the market's response to their earnings here. Let's talk Tesla, Tom. No real big news flow this week other than the price cuts out of China, which just keep coming, basically. So a little bit of dip buying after the stock was sliding?
Yeah, I think so. And, Tesla's one of those names that you typically, on any down day, you'll see a lot of call activity with people expecting it to rebound. But it hasn't been that way. Down about 11% so far this week. You see that slide there, down 19% for the month.
I wanted to consolidate
down
somewhere
nearly,
over here.
2% today. So, yeah.
Down.
Price cuts in China they have announced on Sunday. Then they're having discounts on their Model S and Model X vehicles moving forward. They're coming out with a new release of the Model 3 in China. They're already starting to take reservations on that. But with the overall market, everything's getting hit here, and Tesla's no different. But that being said, over the next week, we had some unusual option activity in the August 25th weekly series that expires next Friday. Traders were buying over 30,000 of those 225 strike calls. Average debit of only $2
moving back
on
up to
those,
the
so
highs.
that break even of 227 over the next week. That's about 5.5% above the current share price of about 215. Puts are out trading calls today, Oliver, which isn't surprising because the stock is down. But over 3.2 million options have traded in there. That's nearly 2 times the normal daily average volume that we've seen in the option market over the last 5 trading sessions. So, yeah, a lot of flows in there. Call activity is pretty robust, which it normally is in Tesla, but puts out trading calls today. But this trader thinks that over the next week we're going to see a rebound in Tesla from the slide that we've had this week.
Wow, all right, nice.
2170.
225 strikes.
It wasn't such an illiquid stock to trade.
All right, so
been a
far
nice,
so good,
nice pickup
Tom,
just for a
and
little
this
day
is where
trade
it
here
breaks
on
down, 'cause
this
the one
break.
that really matters, Nvidia next week.
That's how I traded it last
Spot a
time, and then
bearish trade. Just how bearish? What's
got
it
stopped out
betting on?
because broke back below.
Well, I mean,
Or
if you
was
look
it?
at the move
It was
last
this one, I
earnings
think.
report, Oliver, it jumped 3 standard deviations
I
above
closed
what
out
the
here.
option market was pricing in.
Or no,
at that
I
point,
closed out
right?
down
When
here.
they,
It's too late. That was a
lifted
problem.
that guidance pretty severely.
I'll wait for the
from,
resistance.
$7.5 billion to $11 billion.
Same sort of setup as
Expectations
GNS.
Pretty high for
In a downtrend.
Nvidia going into this
So far,
report.
GNS is holding
The
above that
option
resistance,
market
though.
into next week's options are pricing in about a plus or minus $50 move over the next week. It could be a lot more than that, Oliver. You see that on the 1/3 level on from the right-hand side of that chart.
Don't need to see
That was
barbecue
that
do
jump
that.
up the last earnings event that they had. You've
Above
seen
this
price
one.
target hikes across the board, most of them above $500
But I mean, it can come down and
now,
trade sideways here.
moving
There's
forward.
2 ways to get above this
Companies
resistance: go
benefiting
up
from that
or go right.
robust artificial intelligence demand.
Doesn't
The
have to just keep going up. We
H100
can
Hopper
literally do this.
platform that they have.
Same way broke this
They've got
resistance. They're just going
orders,
right
an
at a certain
order
level, and
imbalance
boom,
over the
it's
next
broken.
few quarters, where the orders are outpacing what they can supply by over 50% at this time. So demand's out there for these chips, and that's what they
ratcheting up some
stated.
more.
And a lot of people think that they actually
I sold
lowballed
the
that
puts.
future guidance moving forward for this quarter, but we'll get some clarity on Wednesday. But
That's
that
weird,
being
Kitty.
said, Oliver, somebody
That chart looks
taking
pretty straightforward.
A bearish trend here. Now,
ChatGPT.
there's a lot of calls trading in Nvidia
Maybe.
today. Don't get me wrong, but what stuck out to me was somebody in there buying some puts, and they went out to the August 25th weekly series here that expires next Friday, so you'll capture that earnings event. Over 9,000 of the 395 strike puts were bought for a pretty hefty debit for out-of-the-money puts. These puts are roughly about $38 out of the money, Oliver. They paid $11.30 per put, so that tells you right there how high implied volatility is in there. So the break even for this trade
The original channel
383.70, and that's about 11% below the current share price. That's also about what the option market's pricing in for moves
Kinda
over
crazy.
the next week in there. Over 800,000 calls have traded in there today, but puts is what this trader's looking
Puts.
at, and he thinks that if we see any disappointment, maybe something along the lines of where they can't produce enough and sell enough, and now AMD gets to catch up, there could be some concerns there. But I don't think anybody on the street thinks that they're going to disappoint with these earnings come Wednesday after the close, because every analyst out there has been raising their price target over the last few weeks.
Yeah, they're literally flying off the chart. Can't keep up with how quickly they're moving higher. Even with how fast the stock has moved, now that it's pulled back a little bit, the expectations are stratospheric. So, going to be a lot to live up to, certainly.
See you,
Interesting
GNS.
trade. All right. Thanks, Tom.
Barbecue's holding it. Got 15 minutes. You get a little sell-off here.
Upside. Next week is not just about earnings, though. It's about Jerome Powell and Jackson Hole. So let's talk some bonds with the one and only Larry Shover joining us, Exchange Capital Resources Managing Director of International Markets. So
Too high the day on spot, just like that. Calls at VWAP. Was the
what do you
play?
think he's going to talk to us about?
My, oh my.
Prepared statements. That's the thing.
Got all that volatility
he's not gonna
last
talk
hour.
About the durability of the 2% inflation target.
Huge.
He's not going to
Building
talk
the handle.
about
Back at it.
has R-star going higher since COVID. I mean, it's going to be prepared
23.6% would put us at 439.25
bias,
area.
especially after rates.
That's not that far off of where we are, actually.
That said, I think a lot of
It's that first stop.
might imply to people that the Fed has greater tolerance for demand destruction, lower growth, higher unemployment rate.
Now, that's what he told us last time. Did he live up to the promise of pain, or did he soften up these last 6 months, Larry?
I don't think he's softened up. I think things have worked really well.
Now, Sam,
when you see,
what do you think of
Joel's openings this past week up, 9.6 million. There's still
hanging out
ample
up there.
room for
Just
to see a demand
OPEX
destruction,
moon
to see a
mission.
correction in the equity market before the
at
unemployment
you.
rate starts to falter. But if history is of any guide, we know that once it starts to
Not
decelerate,
affecting any
it
of my
decelerates
stocks.
very quickly. So I'm sure
The
that's
mega
front and
caps,
center
maybe.
in the Fed's mind.
Okay. So at this point,
Run,
we got
maybe?
the 30-year
No, not even
breakout
run.
in yield. 10 hasn't quite done it on the
charge
52-week
point.
basis, but I mean by a sliver. Does the
AMC's
30-year
green.
open the door for other rates to
Spy.
follow higher?
It could, but I continue to be constructive in duration. Not.
Oh, look at
I'm not
you.
getting in the way of the 10s or 30s this week when you have like auctions, when you have Jackson Hole coming up. But I do believe, at some point, the long end of the curve is going to have to grapple with global growth and term premium, and I do think that rates will be lower.
What a way to end the
eventually on
week.
long end.
And
So
OPEX.
scoop up some 30-year, 10-year
Puts?
while you can.
Buy puts, last 10 minutes?
Well, yeah. I mean, if you'd like to, I mean,
On it.
I'm not. I mean, I'm waiting as a pedestrian, not getting in the way of the supply that we have next week, and also Jackson Hole. But I do believe over the medium term, duration is definitely attractive.
Oh, I missed my entry.
What will you look for to know if we are turning that corner then where the upside stops, rolls over, like you're talking about?
Yeah, I think it's got to be, it's only been recently that the equity market has taken notice of higher yields. And the S&P is up,
I think I can close these 10 minutes after the bell, too.
It's just unbelievable. So I think it's that. The inflation target is
little
still
Friday
far away,
YOLO.
but I think it's more the labor market, centering on that. And again, if history is of any guide, once it starts to decelerate, it's going to decelerate very, very quickly.
That 10 minutes
but
of
also keep in
Fugazi.
mind that 10-year treasuries, the benchmark of benchmarks, is not just for the U.S. It's a global growth story. So
Missed the entry pretty
we
hard, though.
continue to see numbers faltering around the globe. So I think that's going to add to the
15
task
points.
of attractiveness of duration in your portfolio.
Think Powell's got to kill the notion of cuts next
believe
year
in
real
the
quick?
spy.
Can he address that?
I'm sorry, can I
I
address what?
believe it can touch the sky.
Cuts next year? You think Powell's got to put the
Take my
kibosh
calls
on that next
and
week?
fly away.
Yeah, I think
We be
I think the
rich,
combination
floating in
of
the
that,
bay.
Soft
I
landing
believe
and
in its
pushing out
soar.
policy easing is already
See
in
me
current
yachting through that
valuations,
open
and I don't think
door.
he's got much incentive to
Maui
push
Sam has no
back when
power.
you have, like,
Maui Sam has happy cough.
September, pricing in a
No,
10%
Maui
chance
Sam.
of rate hike, 34%
You have
November.
Bawa,
So
because
he
you're
doesn't
in
have a whole lot
Michigan,
of room to
where
move
there's
at this
Bawa.
point and can be completely data dependent.
All right. Great chat, Larry. Thanks. Have a great weekend, sir. You got it, Larry Shover. Again,
10 minutes of
updates
Fugazi,
on
back to
streaming
VWAP.
world
Let's do
from
it.
Jenny is
I'll take
Verizon
1,000% on
reportedly
these.
in talks with Disney on an ESPN streaming deal. Let's get it now. What are we wasting time for? We only got 10 minutes until the bell. Developing story with the host of Next Gen. Okay, Jenny.
Jenny.
All right, Oliver, so Verizon appears to be the latest to throw its hat in the ring for all talks ESPN, and this has since been a pain point for Disney. We know that right now when looking at its streaming service and its direct-to-consumer business, it needs to do something here because since Iger took over, we have not seen
that's all you need.
this drastic change in the company's overall performance that I think a lot of people had hoped for. Disney shares down 2%
fighting that resistance.
year-to-date, down about 4%
There's that 10 minutes.
this week, but Verizon has
See if
reportedly
OPEX
jumped
gives us
into
extra
these open talks over a
fireworks.
potential strategic partnership, of course, with ESPN. Now, the carrier did express some openness to team up on ESPN
Do something
towards
crazy.
the streaming service. We did see reports from the information, as well as Verizon's CEO does have some previous experience with sports leagues. So the partnership, I think, is being seen as one that would make sense. It would be a good start to also ESPN streaming service, given the fact that Verizon does already operate a network of around 100 million wireless subscribers. It would also build on that early partnership, if you recall, that Disney and Verizon had when they first launched Disney Plus. We did see Verizon offering the new service to its wireless customers for the first year back in 2019, and I was one of those people. I did not then resubscribe to Disney Plus, but it was wonderful for the first year of its launch. Now, at the Allen & Company conference in July, Bob Iger did suggest the company was evaluating whether its linear television networks were core to its business, suggesting the company would pursue expansive thinking about whether networks like ABC would remain very central to then Disney. He said that ESPN streaming would be a matter of when more than if, and that the company would be seeking these partnerships to help with its live sports distribution, technology, marketing, and content. He indicated, though, that he wanted to keep control of the sports service. It says sports is key to Disney's future. And I kind of agree with that because sports is, I think, what differentiates Disney versus, say, like a Netflix, which doesn't really have any push into live sports content. And now Amazon, of course, has the rights to the NFL Thursday Night Football. So ESPN is definitely Disney's edge here, but it's just not making money at this point. Disney does own 80% of ESPN, and then Hearst owns the other 20%. So will be interesting to see how this shapes up. This will be an ongoing story.
For a lot of them
this is just
been
the latest
lately.
company that's in talks over ESPN. Hulu is another one we're always discussing these various
probably because they're trading over
to
Schwab or whatever.
Hulu, it's another one that has
they're just doing some changes, and so
I
they're
believe
just
in 2024.
Slap this thing on there.
It's amazing all these well-known brands and the
Disgruntled.
difficulty of making money off of them.
Chicago traffic.
ESPN
She gets to sit in the back of a lift. No problem.
A solution for such a hugely globally recognizable brand, but such a thorn in their side. Maybe some progress being made here, though. Thanks for the update, Jenny Horn. Great stuff. When we come back, our Schwab panel will take us into the bell. Cooper Howard and Nate Peterson. Stocks and bonds to end things as equities are in the right direction.
I don't want to get calls for next week.
Nice little dip buying today.
Yes. I don't know if there's going to be any reason for a pre-market move, though. With that hurricane, too, that might be kind of bearish. I'll wait. Yeah. We get this handle. Like, not totally convinced yet that we've finished this cup just because we didn't quite make it. It doesn't have to go all the way, so cautious. Hold it, GNS, hold. Flies coming down there. Barbecue, see, it's that resistance. We'll see what it does next week. See if we just turn this into a head and shoulders. Continue the downtrend. That's the move I was trying to get with my trailing stop. Danced around and closed it. No, I don't think they're at home with that backdrop. See. Make sure you don't have anything expiring today you need to take care of. Check all your accounts, check all your expiration dates. I have neg calls expiring worthless today. This is why the theta farm works. Neg is up 3.6 though. That's neat. SPY's coming down more. Dang, I knew those contracts would have worked. Look at that drop. Not even a 5-minute finger slap yet either. Most costly natural disaster. The Disasterino circuit breaking ultra gapper. Papa go 10,000% on BCG puts. Yeah, I like that call out, man. We'll see. That'll be fun. I mean, it won't be fun. That'll be sad, but it'd be nice if we can get a play that works out. Exposure. There's almost all the way to VWAP. Let me see what these contracts go. Went for. Where is it? 36. Oh my gosh, it went up another over 100% from there. Jeez. That's crazy. I sold them for 36 cents. They're at 80 something. Oh, you've got shares of Nick? Nice. Yeah, maybe GameStop will buy them and shoot this thing up to 10 bucks. Had that nice RSI divergence here that started this trend. Found nice support. I don't know. Like, I don't even know what the catalyst was for that, but now it's back below there. Finding that as resistance. Not seeing anything else yet.
Powell, his speech has been released, or the paper that he's going to be discussing has been released, I should say, and it's really about how looking at the work week and looking at labor and employment. So I don't think that he's really going to do much in the way of trying to shift the market narrative. The Fed has gone really out of their way to say that they are going to keep rates at these elevated levels. If I would look at it, there's low probability of additional rate hikes during this cycle according to market expectations. And I think that if you look at the odds going for a rate hike versus a rate cut, I think likely it's more that we could potentially get a rate hike.
Barbecue holding 15%.
But I really don't see that as a base case
GNS
for us.
bounced on
Really,
VWAP
what
a
our
little
base
bit.
case is
That's
that the
good.
Fed
Tough
should
down.
hold at these elevated levels probably until Q1. And I don't see next week anything that comes out of the speech really going forward to change that outlook, Oliver. Granted, we could maybe have a surprise, but I don't expect that.
And Cooper, just real fast, and what would constitute a real policy surprise? Would it be something pointing towards like an additional hike or something like that? Like what would be like, all right, that's clearly different than what we had expected?
Yeah, I think that would be more Powell trying to open the door for an additional rate hike. At the last meeting, he really went out of his way to kind of not be, kind of say we're data dependent.
Talking about.
And not say that the September meeting is a live meeting, or the upcoming meeting is a live meeting, excuse me. So I think that if it were to be a surprise, he'd open the door for an additional rate hike before year end.
Okay.
His terminal rate hasn't
Nate,
changed.
NVIDIA next week too. I mean, if you had to pick one event to be your indicator for the market, I mean, it kind of sounds like, as Cooper describes it, maybe a little less potential for surprise in Powell than there could be for NVIDIA.
Yeah, I mean, of course, NVIDIA is going to be, an important event. You know, we saw how it basically reinvigorated the animal spirits in terms of getting some multiple expansion since their last earnings report and that, blow off the doors guidance that they gave. But there is another AI player that's in there. If you look
back
at,
down to
for
VWAP in the
example,
last
we
minute.
take Microsoft, their guidance was not blockbuster.
GME
Another big one out
breaking
there
down
is
a little bit.
Supermicrocomputer to make the servers, and then they use NVIDIA chips in there. Their guidance, this stock ran from basically 100 to 350 into the report.
Yeah, his
So
contracts.
there's a lot of just
Oh, these would have been
built up,
300%.
anticipation
No
of what
way.
they're going to have
Is that
to
real?
say. Their guidance
It is
came out
real.
and it was in line. which tells me the analysts basically
Yeah,
had
30 cents.
modeled what the AI growth is being
$1.
delivered for that company. So I think the question is, how big are the expectations for NVIDIA next week? We know that, if they come in with an inline guidance, that likely will be a disappointment. I think the expectation is, if you look at what the analysts have been doing over the past couple of weeks, all these price target hikes and upgrades, that you would expect them to have robust guidance. But how robust is robust? It's not going to be 11 billion
from where I
versus 7
sold them,
billion
actually.
expectation like we saw
More than
last
300%
time.
from
So
where I
that's
bought
kind
them.
of
Where
a
did I buy
question
them?
mark. We'll see. It could be a disappointment if they don't come in and really, pound the table on how
When I
great
bought
the
that
AI
one.
demand still is.
All right.
Yeah,
we put
would have
that.
been
Reinvigorated the animal spirits. Indeed, very well said there.
I've been 400% from where I
last
bought it.
earnings.
Crazy.
High bar
There's the
for
bell.
sure. Thank you guys.
SPY
Good combo.
opened. Wow.
Set up,
SPY
Cooper
basically
Howard and Nate
flat.
Peterson
Up
for
0.04%
next
on the
week,
day.
Also for our next conversation.
And I think we're going to start building that handle. Maybe one last little dump before it, but maybe not. Definitely showing some strength today in this uptrend. See how this plays out next week. Thank you guys for your support. Hope you were profitable this week. Sub up, like up, comment down. Happy money sticks around. Show you guys what we did today. PCG, shout out Bubblicious. If he's wrong next week, banning him. Yeah. Hurricane Hillary, California, energy company. See what happens. I got 15 puts for next Friday. Got 100 of them. I got calls for GME for this potential inverse handle and the support level GME is at. September, 20 calls. Did that on options account, which has been getting a little wrecked lately. Mostly because of RAD. Contracts went from 400% to 83%. That. On the little small account, up 67 bucks. 2% today. 2%. It was up 10%. But yeah. Oh well. Green is green. Green on the week on that. And Theta Farm, you have to join Theta membership so you can see what we're doing on there. Opened some stuff up today. I think almost closed something out today. I just never got filled on it. Bought top shares. I don't think I'm allowed to sell them, so I'm gonna hold them for a day. Well, over the weekend, I guess. Probably end up being a mistake. Oh well. Tupperware, things up 2%. Little bull flag. Not really. Also a little inverse head and shoulders. It's still not really breaking this downtrend though, if you see it. Little channel. That would be nice. Here, potentially. That work? There? Yeah, that's kind of what I was thinking at first. There you go. So yeah, has it, but it needs to. I need to see some out here. Some more consolidating up here or something. Or reversal. GNS picked up GNS shares today. Nice big bounce. Didn't get them here because I'm not dip buying this. Didn't get them here. I want a break of this, and we got it. So I picked up some here. Stop again. Yeah, let's see, because I actually already stopped out of these last time. Can't remember. Oh yeah, right here I stopped out. So stopped out, bought back in. Yeah. So we'll see what this thing provides for next week. Inverse head and shoulders, and it is out of that. Just so subtly out of that trend down, I see. Stop loss in here would probably be break of this shoulder. Right there. 111. KBNT sold off today for some reason. Got the top. Liquor got dunked on again. Yeah, 26%. Is great. And AMC is green by 1% today. GME calls. This is a little different because this is kind of front running this a little bit based on it being a support and potential for an inverse cup and handle that could be built. So for more confirmation, I'd want to see a break of this resistance line. So if we don't start to get at least consolidating and some flattening out next week, I'll probably dump those calls. They're September 20s. Yeah, that's what I got. Hope you guys had a good week. Hope you're on our Discord, following us on Twitter. Be down to do a Twitter Spaces if you guys want to chat about whatever. Come tell me why barbecue is the greatest investment of our generation. Love to hear it. Got him. Nice, Publicious. Thanks, guys. Thanks, Publicious. And yeah, who and what? Guts, thank you for the pizza. Hot and ready. Dono this morning. Appreciate it. You guys are at 24 likes on the day. Thank you for that as well. Hope you had a good week. We will see you on Discord or Twitter. Thank you for the support. Publicious, Kitty. Maui. Be safe. Don't catch on fire. Don't drown. If you do, at least do it in style. Surfing or flying a kite or something. Julian, Grace, I bid you farewell and happy weekend to you. Nurbin, Poison. See you guys. Thank you. Peace out.